Good morning, everybody. Welcome back to another episode of The Market Open. We are live. It is Friday, July 24th. Dude, we got through the week. This week, once again, felt like a super quick week, but also felt super long, given all of the headlines, all of the volatility, all of the different earnings that we had to deal with. And you know, this week was a big week for earnings, but next week's going to be an even bigger week for earnings. We only had 2 of the Mag 7s this week. Next week, we have 4 of them. So we're going to have a lot to analyze going into next week, a lot to discuss. We had a ton of stuff happen over the past 24 hours. Obviously, the biggest thing that happened yesterday was Intel earnings, which we will discuss. But on top of Intel earnings, you had Google and Tesla have their worst days in a very, very long time. Tesla fell 15% yesterday, worst day since January of 2024. Google, based on their first quarter since negative free cash flow, 2004 was the last time they had that type of a quarter. The stock fell 7%, which was one of its worst days also in the past few months. $317.97 in the pre-market. It's up about 9 cents, getting a little bit of a rebound. Tesla up about $1, getting a little bit of a rebound. But because those Mag 7 names took as big of a hit as they did, the S&P 500 took a negative 1.23% decline. Now, I think the sell-off yesterday, and I think a lot of people agree with this, was exaggerated primarily based on oil hitting 90. Actually, in the pre-market right here, oil is 89.24, so it's not as aggressive as it was yesterday. Yesterday was actually pushing 93. And maybe that calming down a little bit. Maybe Trump says something to calm things down. It is a Friday. We are heading into the weekend, and going into the weekend, we tend to have more aggression with Iran, so we'll see what happens. But overall, it's been a challenging week for a variety of different issues, but the earnings this week have been the most important thing, and all the earnings have crushed it, regardless of how the stock prices have reacted. And, hopefully going into the end of July, we will see if these stock prices can start to get a bit of recovery. If they don't, then it's just another July in the books that tended to not be the best for high beta momentum stocks. So let's get into it. We got a lot to talk about, a lot to get into. Good morning, good morning, good morning. Happy Friday, Emilio. Good morning. Thank you for being here. June, I'm Benny. What's up? Lisa Adams. Got the top button, baby. Got the top button. Like, look, if you unbutton it, I don't know, bro. It's not a vibe. It's like, it's whatever. You gotta keep that button there. That's it probably looks better without the top button, but that is what we do. Lena says, bro, we are almost in August. That is correct. We are almost in August, which is absolutely crazy, bro. Because after August, you have my favorite time of the year, which is September through December. And September through December is very fun, but the fact that, even yesterday at night, like I was walking outside at night and it wasn't hot. Like a couple of weeks ago, it was like scorching hot at like 9 p.m. It was like a little chilly, like not cold, but it was like a nice little breeze. And like that was the signal of like, oh, this is like, we're heading out of the sort of extreme heat that you have in the summer. And we're getting into August, and then September, you're probably gonna have to wear a hoodie. So it's kind of crazy. 2026 is just flying by, but nonetheless, we all got to keep living through it as we head into the new year. RNT, what's up? Bry, what's up? Listening on my drive from Atlanta to Austin. Thank you for being here. Thank you for having me in the car. Jeremy, good morning. Thank you for being here. Chimo, what's up? What's up? Dominic, Hot Crunch, Zocolt's top button is a vibe. It is indeed the vibe. Stano, thank you for being here. All right. Let's get into it. So I think we should get started with, hopefully there's no lag today. I know there was an annoying lag yesterday. I mean, I didn't do that much with my computer. I deleted some I just cleared up some storage space in my computer, deleted some old files. Maybe that's going to help. But if it's good today, it's probably a YouTube StreamYard thing doing well versus a Wi-Fi thing, because I really don't think it was Wi-Fi yesterday. I think let's start off with Intel. I think that's the big thing we got to talk about. Also, Jeff Lawson is going to be on the show today. He was at 10:45. He's going to be on the show. And Jeff Lawson is the former CEO of Twilio. So he now is running a nuclear fission startup. Twilio, the company that if you sign into your Bank of America and it says send me the 6-digit code, Twilio is the company that has the back-end architecture that sends your phone an SMS message that gives you the code. So it's going to be super interesting to talk to him about everything that's going on in the age of AI and what he's doing with nuclear energy as well. So that'll happen a little bit later in the show. All right, Intel, let's get started. So Intel crushed it. The stock is not really reflecting how well they crushed it but that does not mean they didn't crush it. In fact, it's kind of funny because the stock was up 14%. Jim Cramer tweeted Intel. This is the one at like 5 p.m. and then at like 5:20 it falls to like 103. But I think more so the stock is struggling because of oil, and also just because of, the stock trades at a pretty aggressive premium. It's now at 102.91, but it did get a 113 move. So it was a massive move. I actually think 14% move. And, then this one ended up taking a hit. So what did they report that got the street excited? First of all, revenue, they beat by $2 billion. Best revenue in the past 25 years, 25% year over year. Adjusted EPS, they beat by 91%, 42 cents versus 22 cents expected. Gross margins, 41.8% versus 39%. That's a beat. And then they raised their fiscal year CapEx. The actual reason I think Intel fell during the call was because, once again, they asked the same question that they asked to Google: how aggressive is the CapEx going to be in 2027? And Intel said significantly. And because of that, we'll talk a lot more about this whole CapEx, should stocks be selling off if they're spending more on CapEx stuff. But the point is, even a semiconductor name that's spending more on CapEx with an increased guide on revenue of 16.8 billion versus 15.2, again, another $1.5 billion beat, is enough to get the street to be like, oh, we don't want to touch it because they're going to be spending a lot on CapEx. Like, it's very weird how the street has conceptualized the nature of this CapEx, but it's also been the story of the entire year. Now, Intel got upgraded across the board by a lot of different analysts. I mean, people really like this quarter. AMD also got upgraded because of those earnings, because if Intel is beating on CPUs, then obviously AMD is probably going to do well. Bank of America raised their target to 160. They say Intel's Q2 beat and raise earnings call reconfirms the two pillars of our buy thesis. External manufacturing foundry customer discussions have reached a more tangible stage. Intel's core server CPU business is strongly participating in the ongoing agentic cycle, with data center sales surging 59%. And we reiterate our buy and continue to view Intel's US-based leading edge capacity and strong backing by the White House as a competitive moat. Essentially, Intel is the TSMC of America. And although there is a higher premium conventionally on the earnings, that's still a reason why, why you pay for it and why you stay long the stock. So based on the numbers that Intel put out, I think Intel's going to be fine. I think the stock probably goes higher from here over time. It's just the easy money, I think, has been made in the stock. So the risk reward is a little bit more in question now that the stock went from 20 to 100. For it to get to 100 to 200, right, become a $1 trillion company, I think the sustainability of the growth is going to be the most important thing. Like, this quarter was good, but this quarter foundry revenue was still negative. So it's like they're scaling up a lot of other parts of the business, but we also know there are, tons of competitors in the CPU space, whether it's ARM, AMD, obviously NVIDIA, and because there's just so much demand, Intel will do well. However, can they sustain that type of growth for the multiple that they're being paid for over the coming years? I think that is the question, but I also think that's also why the stock is not blasting off into the 200s. Now, when it was at 30, 40, the sustainability of that growth to get to at least a $500 billion market cap valuation seemed reasonable, which is why the stock is trading at a $500 billion valuation. Is it sustainable at a 700, 800, trillion dollar valuation? I think is the question. By the way, Verizon just signed a $1 billion agreement with Google for creating a data center. Google is up about $1 right there. Verizon, which has outperformed every Mag 7 this year, is up about 0.32%. Verizon and Google, $1 billion agreement for a data center. So that is what we have on Intel. The market likes it. This is what the Intel CEO said on memory, and that'll get us into the conversation of what's happening with Kospi, which ended up taking a little bit of a hit overnight.
I think a couple of things. First of all, the memory become the big supply constraint challenge, and we're collaborating with the three big memory vendors. That's very important to serve our customer as a number one priority. The next thing, as you recall, Intel have a rich history in the memory, and recently we hired Seok-Hee Lee to join us. He used to be the CEO of SK Hynix, and clearly memory, it become the bottleneck, a lot of AI infrastructure and pain point for customer.
So you got the Intel CEO talking about their partnership with SK Hynix. There's some rumors that SK Hynix is trying to get one of the old Intel Ohio fabs and have a collaboration on that. But obviously he's making the argument that memory is still super important, and memory is going to be one of the most important layers to the stack. And, it's not something that we don't already know. Having said that, if the Intel CEO is saying that memory is the most important and there is an entire country's index that is propped up on two memory companies, then why was Kospi in South Korea down 6%? So this was really interesting. Last night, there was a bearish sell side note that was proliferating from Morgan Stanley. The analyst's name was Sean Kim. He's their head of Asia technology research. And he came out with some notes, and there's a lot of people in the industry that have been talking about his sentiment against what he's been feeling around memory by basically making the argument that he feels an oversupply of memory and a price decline of DRAM and NAND is going to be happening within the next year. And this guy apparently has a decent chunk of influence in South Korea, in that part of the world. So when he talks about memory or technology in general, the market listens to him. And I legitimately think it was either leverage again, but you have to ask yourself, like, what event caused all this leverage? Like, the leverage has already been wiped out. Not all the leverage, but obviously, Kospi's down 35%. A lot of leverage has been wiped out. So people are like, oh, it was just margin calls. It's like, okay, on a random Thursday, maybe it was just margin calls, but the margin calls have to get triggered because there's a catalyst that causes the market to sell off, and then the margin calls compound it. But there has to be a catalyst. And so, again, this is not officially confirmed, but there were a lot of rumors last night that this guy went bearish, and the note that's circulating around seems to be more accurate than not. And he basically just highlighted, like, look, we think the oversupply of memory is coming way sooner than people think, and that is going to lead to a decline in these memory prices. Now, maybe that's wrong, and maybe that's not necessarily accurate. And obviously, there's a ton of arguments to go against his argument, if you go deeper into the memory ecosystem. But the broader takeaway is not even if the note is accurate. Kospi reacted by going down 6% on just the sniff of an idea that memory is not going to be stuck in the greatest supply-demand imbalance that we've seen in the history of markets. So even if the report wasn't real, even if it was fake, even if it was circling around from different ideas, even if it was old, the fact that Kospi reacted that violently towards it really does beg the question. And the question that it begs, which is the question I want to ask everybody right here, and I think it's a worthwhile question to ask. We talked about it on Basis Points last night, so you guys will see that later when it comes out. But what do people think is the answer to this question? Can the Mag 7 and the semiconductors participate together in a bull market? And I think the reason this is such a pressing question is because in 2026, the market has obviously been extremely selective. If the semis go up, the Mag 7 have tended to go down, which is pretty much what has happened all throughout 2026. And the opposite, if the semis go down, the Mag 7s go up, which is kind of what happened over the past few weeks until this week when, the trade reversed again. But it's been kind of ridiculous that, for the semis, the CapEx beneficiaries to do well, the market has to take down the CapEx spenders. And when the CapEx spenders do well, the CapEx beneficiaries go down. When Kimi K3 came a week ago and the market thought we would need to spend less on CapEx, obviously the market was wrong on that, Mag 7 went up. Because the idea was, well, they're not going to have to spend all their free cash flow. And now it flips, a day later after, or a week later after Google says they have to spend a lot on CapEx. So I think this is a very interesting question because, again, Kospi's down 6% because it's propped up by two companies that are propped up on the belief, Samsung and SK Hynix, that the memory supply-demand imbalance will exist. If that belief starts to fade, much less we start to get actual evidence that belief starts to that belief starts to fade away, it's almost like those two stocks are ready to go in the gutter, which then begs the question, let's say these two stocks have a ton of cash, right? Let's say Samsung, SK Hynix, throw Micron in there, have hundreds of billions of dollars of cash by 2028 or 2029. And the market has started to come to the conclusion that memory is either an oversupply, we don't need as much, the prices aren't going up as crazy, quarter for quarter, they're going up like 30%, that's not happening anymore. And the Mag 7 start to cool down a little bit on the CapEx. They're still going to spend, but they're not going to spend as aggressively. Does the market whiff that out and realize, nope, we're buying Meta, Microsoft, Google. We have no reason to be in these memory names anymore. Or does the market say, well, those memory names, guess what they're going to do? They're going to buy back all their stock. And if they're going to buy back all their stock, then we should be excited for them. And I'm a little bit more skeptical on the idea that the market's going to say, we are fine buying suppliers in the AI GPU supply chain simply because they're going to buy back their stock. Like, buying back stocks is a way to artificially engineer your EPS, but at what point are you literally just buying something because it's buying back their stock? And the classic example is Apple, but Apple has a fundamental business that has the ability to diversify, the ability to grow, and it's Apple. I mean, they touch 3 billion people. They create the most important products in the world. Do you buy suppliers of a component of a GPU simply because they have excess cash and can buy back their stock? Like, I don't know the answer to that question. My gut tells me the market would want to buy more fundamental businesses that are growing their cash flows and organically starting to have different revenue streams like a Meta, Google, Microsoft, Amazon. But as of now, and maybe even for the next 2 years, those companies aren't going to have the type of earnings growth that Micron's going to have, which is why we've seen the rotation. And I wonder if both can actually participate at the same time. I think that's the biggest question. And I don't know. I don't know if there's an answer to that. Paul says it's not possible. Kruno says no because of the cash flow. I would tend to agree. I kind of think if one goes up, the other goes down. Maybe they can kind of go up together. But like eventually when the market flips to Max 7s, the semis probably take a beating. Until the market does that, the semis probably go a lot higher, and maybe that's going to take many years. I mean, even Amcor, right? Amcor got a partnership with NVIDIA yesterday, $1.5 billion partnership. NVIDIA will be prepaying the $1.5 billion to Amcor to expand their advanced packaging facilities. Amcor has partnerships with Broadcom and Intel as well, so Intel having good earnings for CPUs obviously was very good for Amcor when it comes to the packaging of that. But like, does the market buy Amcor in 4 or 5 years over Meta when the demand slows down a bit and their earnings growth also? So, I mean, if you look at Amcor's chart, and the reason I'm also saying this is look at this chart, dude. It took 30 years for Amcor to get back to the levels that it was at around that 1990 timeframe. For Intel, it took 25 years. It took an entire AI revolution for them to get back to the levels they were at during .com. So if the cycle tends to slow down a bit, which means their earnings growth tends to slow down, which again could be many, many years from now, does the market buy Intel at the same time that they're buying Meta and Microsoft, assuming that the capex is going from one place to another and one company is benefiting from the other? It feels like it's a very yin and yang type of market. Like you benefit, you don't. Your stock goes up, your stock doesn't. And I wonder over time if that, if that continues to happen over the long term. The market is rewarding the receivers of all the spend of capex once that flips, and the spending will rotate. Well, see, I think a lot of people are making the argument that the rotation doesn't have to happen and the semis can go up with the Max 7. And I am kind of more on the opposite side of that. I think, no, the semis are going to have to take a hit if the Max 7 go up, or vice versa. But, that's the question. Is there a world in which they can both participate together in a bull market? Because if there's not, then, maybe 2026, 2027, we still have to see Max 7 underperformance in order to see the semis, continue to go higher. But time will tell if that fully takes place. More memory will become available, but the demand is insatiable. Yeah, see, that is fair. But again, if the demand is insatiable, but we have enough supply, the pricing power goes down. That's the most important thing on the memory trade. But if the demand is insatiable and we don't have enough supply, do the Max 7 go down because the memory names get to these multi-trillion-dollar valuations? I mean, Micron, Samsung, SK Hynix are already at $1 trillion. Like, that's the broader question. Can Micron get to $3 trillion and Google get to $7 trillion at the same time? Or Google get to $5 trillion at the same time? Or do those trillions have to leave one company to go the other? I think that has legitimately been the biggest question of 2026, and no one fully has the answer. However, Jensen does have something to say about this. This is a clip from one of the interviews that came out yesterday, where Jensen explicitly says we will eventually have a bubble. It's just not now.
Every industrial build-out in history has seen a bubble over investment. What is this generation's bubble danger?
The bubble will come someday. It's just not today. This is in the very beginning of the build-out. And someday,
3 years, 5 years, 10 years?
It's very unlikely in the next 5 years.
5 to 10.
Yeah, it's very unlikely in the next 5 years, and we'll see about the 5 to 10 years. It just depends on how fast we can build. Now, the challenge, of course, is that the rate at which we can build the infrastructure is limited by physical things. Today, the industry could build faster. It could run faster, but we don't have enough chips. We don't have enough memory. We don't have enough land, power. We don't have enough construction workers to build the data centers. We basically are constrained in every single direction, in every single way. That constraint is good. That constraint is what holds the system back, so that it gives us plenty of time to go build out these infrastructure. And so, on the one hand, there's a great desire to invest the capex. On the other hand, the ability for that capex to land and turn into productive supercomputers like this, into AI factories, that is delayed because of all these different constraints. And so, I think it's going to push out the time when demand exceeds, or supply exceeds demand for some time.
I thought that was a pretty insightful thing from Jensen. Now, he has said something like this before. It's not like this is the first time he's made this type of an argument, but he's making a pretty basic claim, right? Which is that If supply eventually exceeds demand, there will be less constraints, which means if there will be less constraints, the pricing power and the necessity to feel that access to the companies that have the ability to resolve the constraints is not going to be as massive. You're just not going to need to care that much about them. And so his argument, Micron right there down about 1.9% pre-market, his argument is that's many years away. He says it's at least 5 years away. And if it's 3 years away, the market's going to sniff it out in 2 years. If it actually is 5 years away, maybe the market sniffs it out in 3 years. If it's 10 years away, maybe it takes half a decade for the market. But the point is the market will figure out long before the earnings have peaked, in my opinion, that it's time to rotate, it's time to switch. And I think every time we have a little bit of a hiccup in the semiconductor market, people wonder, has the market already figured it out? But then again, you look at the actual data, you look at the earnings, you look at what Kimi K3 is actually saying versus what people think they're saying. And it's like, no, this is a long way to go. But it's kind of crazy because we're all living through the experiment of previous bubbles. As Jensen says, this will eventually turn into a bubble, but we're living through it in one of the most exciting, I guess, revolutions that we've ever seen when it comes to tech, because so many different players are involved. The use cases are so much more massive. And quite frankly, I mean, it really might last a long time, as Jensen says right there, because we just have so many parts of the stack that haven't even been built out yet, robotics being one of the biggest ones. But the hiccups in between, the peaks and valleys in between, I think will always psychologically make people question if it's over. And, that's just the game that we're going to be playing for the following years. Micron right there, down 2% pre-market. SK Hynix is down about 3.14% as well, as that one is also taking a little bit of a hit. Again, Kospi was down 6% yesterday, which is why Kospi is down, and also why some of the memory names are going down with it. AMD. So AMD loved those Intel earnings because it signaled that the CPU market is going to be very, very strong for what will be happening in the future. Bard raised their price target on AMD to $1,250 as they feel that the agentic inference cycle for CPU is going to be very, very important. There was also another company that raised their price target to, I believe, $780 on AMD, and their argument was, we believe AMD will be able to do $20 of EPS by 2030. We also think they might be able to do even $27. So when you put the 30x multiple on that, you start to get closer into that 700, 750 range, which is why you're seeing the stock get a little bit of a pump right here in the pre-market, up about 1%. Here's what Lisa Su had to say about their event yesterday.
I think the interesting thing is, every so often you hear like, this is the killer chip.
Yeah.
Right? I mean, you guys have heard like GPUs.
You see that on the model side too.
GPUs are going to take over the world.
Yeah.
Like
everything's going to be on
CPUs
this.
are dead.
Yeah.
Like we're going to move every single workload
over.
And the world just doesn't work like that.
Yeah.
And so our thought process has always been, people asked me very early on, hey, Lisa, why don't you just focus? Like you decide, like whether it's CPUs or GPUs, why do you need both? And, I think about each one of these questions deeply. And, we fundamentally believe that there is no one size fits all. Like the world is a heterogeneous world.
Mm-hmm.
Like you are different than I am. We have different needs. We have different workloads. Our businesses are different. You're going to need different compute. And I think the portfolio that we have, CPUs, GPUs, we acquired Xilinx, so we brought the physical AI component in there. We have a rich, PC, ecosystem, I think allows you to truly pick the right compute.
Mm-hmm.
Now, it's a little bit harder, right? We have a tremendous number of R&D priorities, but I think we've done it in a very, kind of, I want to say, smart way, in the sense that each part of our product portfolio builds on each other. Like we talk about, chiplets being a big thing that we do. We do that across the portfolio. So we do that across our CPU portfolio, our GPU portfolio, and it just is an example of how we're able to leverage getting the right compute for the right workload.
TBPN's daily newsletter.
And here was the other argument she made around collaborations in the industry.
And we're really excited about putting great tech out there. And I'm not kidding. Our mantra, like our number one mantra is, build great products.
Yeah.
And it's about how do we keep pushing the envelope on that. So you have a day like today or this week which has been a culmination of years and years of work. You think about launching Helios,
Yeah.
you think about launching Venice, you think about bringing together the entire ecosystem, and you're like, it's days like today
Yeah.
that we're working so hard for. And I think the culture is one of we want to be really the best in the industry. I mean, our goal is to drive the future of technology, and we do it the AMD way. And what does the AMD way mean? We do it in partnership. We do it in collaboration. We believe in open ecosystems. We believe in using the best technology for each workload. So this idea that one company is going to have the killer chip.
Yeah.
I don't think that's the world we're in today.
TBPN's
And obviously, she's been right about that because not one company is at the killer chip. NVIDIA has had the most growth, but lots and lots of other players, whether it's Amazon with Trainium, Google with TPUs, AMD with MI450s. Many companies are starting to build chips, Cerebras, Broadcom, etc. By the way, Bitcoin taking a nice little nosedive right there. I don't know why, but it is. It's probably going to affect IBIT as that's down 0.5% already. The Clarity Act August 7th deadline. Again, Brian Armstrong seems pretty bullish about it, but Bitcoin's price action is not making you think that they feel that Congress will actually pass it, which is the biggest concern with that one. But, it was almost at 67 earlier this week on the idea that we potentially would get Clarity Act. 64,034.6 on Mr. BTC. So again, AMD, I thought the event was really good yesterday. I mean, one of the other big things at the event was the TAM that Lisa Su was highlighting, basically the idea that, the server TAM is going to be into the $1.4 trillion range. And, that range is not slowing down. And also that's going to be really important for Intel, AMD, ARM, all these companies that build those CPUs.
What we're seeing is that the shift to agentic AI is certainly growing the AI accelerator market very significantly. It was actually last year at this event that we called the AI accelerator market at about $500 billion by 2028. And at that time, it actually felt like a very big number. Didn't you think it was a big number? But honestly, you look at it today and it looks conservative because the AI demand is just continuing to accelerate. And you can see it, right? Better models, more usage requires more compute, and more compute actually builds better models. And so we're now expecting that by 2030, the AI accelerator market is going to reach about 1.4 trillion by 2030. So what do you think about that? Is that a big number?
Look, when you really take a long-term view, if that is going to be how it ends up playing out today, then or playing out over the long term in 2030, then obviously Intel, AMD, all these companies are going to tend to benefit from that TAM growing as massively as that. So it's one of those things where you kind of just sit back and let it play out. Obviously, in the short term, there's going to be a lot of different moments of hesitation across a variety of different things, and there's a lot of execution that is involved from companies. I mean, part of the reason Intel's been stuck for the past 20 years is that they've just been horrible at executing, whereas over the past 2 years, they've been really good at executing. And as long as that execution continues, that stock should be able to get a part of that TAM. Qualcomm should be able to benefit from that TAM. I mean, when you think of that TAM as like a meaningful TAM, that's where all these companies theoretically should be able to partner and benefit from. But the belief that that CapEx cycle has to continue in order for that TAM to continue to grow is also, very, very important as well. AMD right there, 547 is in the pre-market as well. Where are the neo clouds today? Nebius is up a little bit, 221. CoreWeave is down a little bit. ARM, not a neo cloud, but still in the server space, 1% up. And then what about Iran? Neo clouds have actually had a relatively good week compared to where they, I know they're still down a lot from the highs, but compared to where they were on Friday, a lot of them have made a pretty decent jump. But the semis haven't really broken out this week, even after those Google earnings, even though, people thought they would be able to break out on those Intel earnings. Yeah, they did have a Cerebras partnership as well. Cerebras actually shot up yesterday to 244 as soon as they made that announcement, and then it came right back down. The extent of that announcement was teaming up on a disaggregated AI inference architecture, AMD and Cerebras, that divides workloads between both platforms. In the setup, AMD Helios manages prompts and long context processing, while Cerebras' wafer scale engine focuses on ultra low latency token generation. The company said the combined system can drive up to 5x more tokens per second per watt than Cerebras alone, with initial availability expected through Cerebras Cloud in the second half of 2026. So Cerebras, with these partnerships on AMD and OpenAI, has obviously been really beneficial for them, but it also just goes to show how much more competitive the broader market is realizing the chip space is becoming. Trump says Zelensky will be meeting in Washington on July 28th. He also said yesterday that Xi from China will be meeting in September. So you got Zelensky. We haven't talked about Russia, Ukraine in a while. Trump hasn't also talked about Russia, Ukraine in a while. Obviously, the Iran stuff has been occupying most of the attention. But I imagine that situation still, needs to be resolved in some capacity. By the way, we put a ton of tariffs on Iran, not Iran. I'm sure Iran's involved in some way, but in terms of across every country, we put a 10 to 12% global tariff. We'll hear from Greer in a second in terms of explaining why we did that. But on top of the tariffs that were imposed yesterday, which obviously, you got oil spiking up, you got the 10-year spiking up, you got tariffs getting into the picture, like it just creates a little bit of a recipe for higher inflation, which is the broader issue. We also started striking again. So U.S. CENTCOM said at 6:45 p.m. Eastern yesterday, this is the 13th consecutive night of strikes against the Iranian military aimed to hold Iran accountable and diminish threats from the IRGC. Trump also tweeted, "Please let the statement serve to represent until further notice that from this point forth, any and all damages done to ships, cargo, or anything related thereto will be paid for by the Iranian money that the United States has in possession and controls. These damages may be very well substantial, but nevertheless, this is the fair and equitable thing to do." Marco Rubio yesterday said that there's not going to be any level of deal making that we make with the Iranians, because every time we try to make a deal with them, they, just go back to violating their deals. So it's one of those things where, like, the reason the 10-year is getting the pump that it's getting, a little bit down right here in the pre-market, but still at 4.683, probably down because oil is below 90, is based on this idea that the escalation is not stopping anytime soon. Now, maybe the market starts to read between the lines and says, hey, they're talking a lot of smack, but at the end of the day, they're not actually going to go back into war like they did in March. And if that happens, I think oil tanks aggressively. And once oil tanks, the market could rip pretty nicely. I mean, like we've seen it happen 3 times already over the past few months, which means the dip once again would be rewarded. I mean, if oil really were to go back to 65 now at these prices, I think you would see Nebius easily get back to the 250s, Micron probably in the 1100s. But, like, does that happen, or is Trump legit going forward with this as the basis for, the next few months of campaigning for the midterms, which is that I'm keeping you guys safe from a nuclear Iran, as oil is at 89 today. And if that is, the argument, then that's just going to be what all of us have to deal with, is going to be the way Trump is navigating this. Here's what Greer had to say yesterday about the tariffs that they imposed on a bunch of different nations, including those 50% tariffs on Canada.
So for over 100 years, the United States has had a law on the books prohibiting the import of goods made with forced labor. This is common sense, and we've enforced this law to prohibit it. What seems like common sense, I think, to you and me, others haven't done. In other countries, no one really has these types of laws. And even in that small handful of countries that have them, they don't really enforce it. And so we have gone to the world frankly, over years and across administrations to try to get other countries to act on this. Finally, we have put our foot down and we have told countries, you need to take action. You need to prohibit the import of goods made with forced labor, and you need to enforce these laws so that we all have a level playing field. And so we're taking action to do that. And if countries are on the right path, they have a certain level of tariff, about 10%. And if they're not on the right path, it's a slightly higher tariff of 12.5%.
Now, those tariffs are significantly lower than the reciprocal tariffs that Trump wanted to put on them that were taken away by the Supreme Court. But the point is, the advent of these global tariffs with oil prices up and bond yields up is just a little tricky for the idea of if we're going to get rate cuts. The rate hike probability in October is now 32%, which is relatively high. I don't think we're going to get the rate hike, but it's not even up to Warsh. It's up to the Fed. And if the Fed really feels that oil's not coming, I mean, imagine oil's 90 in October, which I don't think it'll be, but like imagine it's 95, 90 in October. There's just no way you're anywhere close to getting inflation down to that 2% target, which Kevin Warsh is very serious about, theoretically, you'd have to raise some rates. You'd have to destimulate a little bit of the economy, which I don't think he wants to do. So, I mean, I think he's hoping that Trump stops the war and oil can come down and he can at least justify that, look, we don't need to cut, but we definitely don't need to hike. Right now, obviously, it's looking a bit uglier. This is what Trump had to say yesterday around Iran.
We're doing very well against the Islamic Republic of Iran. We're doing extremely well. They would like to do something, but I say they're not ready yet. They need more of the same. They're not ready yet. They got some evil intentions. We cannot let them have a nuclear weapon. If we did all this that I'm talking about your data centers, isn't that important? When they start blowing away communities one by one, we cannot let them ever even think about having a nuclear weapon. And that's exactly what's happening. They'll never have a nuclear weapon. Under the And by the way, this should have been done by other. They've been saying 47 years now for about 3 years, but this should have been done for 50 years by other American presidents or other countries. Didn't have to be us, but it seems to. If we don't do it, nobody else is. But I will, and nobody else has the capability to do it either.
And then this is what Trump said about data centers, as that was what part of this conference was about.
We know that the data centers and AI are dramatically increasing the demand for electricity. It's only fair that the cost of building the new infrastructure required to meet this demand should be borne by the corporations themselves, not by the American consumers and the American patriots, American citizens. And I think everybody agrees to it. And actually, they really don't have a choice because there's no way of producing that kind of electricity, the kind you need. And they want to do it themselves. And honestly, they're coming up with some plans that are genius, just like they are. That's why earlier this year, I introduced the Ratepayer Protection Pledge. Under this groundbreaking plan, America's largest tech companies have formally committed to fund or build all energy infrastructure required to meet the demand they are placing on the grid. So they're going to be funding all of those electric needs, and we're giving them the right to build their own power plants. Lee Zeldin is here. He's phenomenal. We know that the data centers and AI.
So obviously you've got the administration that is super pro data centers and AI. And I think if we didn't start this Iran war, the stock market would be on a totally different level this year because, you know, you've got CapEx, you've got data center spend, you've got AI that's starting to show an ROI, and then you got an administration that supports it. But because of the AI, I guess, headwinds that have been dealt with because of oil prices, you know, the market has kind of decided we need to take a round trip on what is happening right here before we give the premium to an administration that's super bullish AI, which theoretically could have also been very bullish for GDP growth. Now, the Department of Commerce also came out yesterday and said that we've evaluated Kimi K3 and its cyber capabilities. Based on a preliminary cyber-focused evaluation, Kimi K3 performs significantly below the leading U.S. frontier AI models, basically making the argument that the only reason Kimi K3 has any level of momentum is because of distillation. And so I also wonder what this means for, you know, the advent of open source models in regards to how Trump is going to try to get China to stop doing it. I don't think he can necessarily get China to stop doing it, but the open source revolution is really good for AMD and Intel and NVIDIA because it just means a lot of compute. It's just not good for two companies in the United States that are, you know, responsible for a lot of the spending right now when it comes to Anthropic and OpenAI. But the administration, you know, they're supporting AI, they're supporting data centers, they're supporting the build out. It's just this Iran war that's making things a lot more complicated. We did have earnings today, American Express and Verizon. American Express beat by 3% on EPS, 453 versus 451. They missed on revenue. Revenue's up 10% year over year. EPS is up 11%. And then you had Verizon, 130 versus 127. They beat by 2%, 34 versus 35 on revenue. They missed revenue by 2%. EPS is up 7% year over year. The stock's not moving like crazy. Verizon's down 0.5%, nothing too massive. American Express is actually, I did not even look at that, down 5%. So American Express down 5% is likely not because of a revenue miss of 70 million. It's probably something they said about the consumer and guidance. And we're going to have to see how the market reacts to that. Let's see if we can get something on it. American Express consumer, 5% in a market where financials are good. Oh, this is what they said. So CFO on geopolitical tensions. We're seeing some impact on travel to and through the Middle East as expected, but global travel and airline spending are both up 10%, the strongest in 6 quarters. No evidence of a slowdown. Gas spending has increased significantly, but at roughly 2% of total billings, it's not meaningful to the overall results. They're also saying younger customers build faster. Gen Z is at 40%, Gen X 10%, millennials at 14%. Gen Z is still only 7% of U.S. consumer volume, as there's lots of growth ahead of that. Management also said premium card momentum strengthened as well. All right, so I'm not sure why it's actually down 5% because you're looking at relatively decent numbers here. But it is getting hit. No upgrades for ServiceNow. We had a 140 target for ServiceNow yesterday. Unfortunately, the software stocks, I mean, they just continue to be in the gutter. ServiceNow is up a little bit right here. ServiceNow should be closer to $100, if not, 110, 120 after those earnings. Same thing with Palantir. I think it should probably be closer to 135. So the fact that these names got re-rated again this week because of the CapEx news, it's just one of those things where we have to deal with when it comes to software. And again, it's the same question I asked about 30 minutes ago. Can the Mag 7 go up at the same time with the semis? Can the software names go up at the same time at the semis? Or is it going to be another few years of like one sector has a month that's good, one sector has a month that's bad, versus everything going up at the same time? And given how bifurcated this market is, that's kind of what it feels like, which means if you're heavy in software, you just have to wait and allocate to the companies that you believe are going to be around, but not get the momentum that some of the semis are getting. Speaking of momentum, Clarity Act, 2 different perspectives on it. You had Warren and Armstrong come out. Here's what they both had to say yesterday.
Hey, y'all. Brian Armstrong here. I'm back in the Capitol working to get the Clarity Act passed. Now, this bill is at the 1-yard line, and it reflects a ton of work from both sides of the aisle to get to a true compromise. You have to remember that the status quo is not serving anyone in the U.S. right now. There's no federal laws. We've seen bad actors like FTX harm customers. This bill is an opportunity to cement the consumer protections and get America back on the forefront so it can lead in this industry.
And then you had Warren give her take yesterday.
On arrival, Senate Republicans just released their updated version of the Clarity Act, a bill meant to regulate crypto, and it's going to a vote on the floor. That's a glaring omission. It does not stop Donald Trump from cashing in on his presidency. A new poll found Trump's crypto earnings.
Warren, I got to stop you. Obviously, she's not a fan of the Clarity Act, but holy crap, Jensen Huang just started a Twitter. And he just tweeted for the first time ever. Whoa. Right before the market opens. Jensen Huang. Do we all want to guess how many followers he has? I haven't clicked on his profile. For my first post ever, I'm sharing a letter NVIDIA signed on why open models matter. Whoa. Open models strengthen safety and cybersecurity, accelerate innovation and diffusion, and enable sovereignty. Again, they just had a partnership with Palantir 2 weeks ago about sovereignty. I'm going to guess he has like 8,000 followers, 7,000 followers, 5,000. All right. I will be 5,191. Wow. Dude, put your guess what you think by the end of the day his follower count is. I think it's like 50K. I'm going to go 50K in a day. Maybe that's too conservative. Maybe that's too optimistic. But I think it'll be like 50K. Jensen Huang, there you go. He has the NVIDIA tag right there. So it is an official verified NVIDIA profile. Wow. Jensen Huang on X. Dude, imagine him responding to people on X talking about NVIDIA. That's going to be crazy. That's going to be crazy. All right, we will see what happens. The stock market, Friday, July 24th, is now open. All right, wake your asses up. Let's get into it. What a surprise to open up this market on a Friday. And Jensen Huang tweets for the first time ever. And his first tweet is about open models and why we need to allow them to exist. I think he's trying to combat Anthropic and OpenAI. They're going to go for trying to get more closed model regulations so that they can, get that regulatory lock-in as he's advocating for open source models. All right, Verizon, that's up about 1%. Iren, that's down 2. Iren loses 40. CoreWeave loses 2. Nebius loses 5. What? Intel loses 1. Qualcomm loses what? We got a semi dump as soon as we open. Micron down 4. people mad Jensen tweeted? What the hell's going on? Nvidia's down 0.5%. AAOI is down 3%. Amcor had a partnership with Nvidia that was up 20% yesterday. Now it's only up 7%. ASML down 1%. IBM's up a little bit. That means the software name should be up, right? Palantir, not really. It's kind of up. ServiceNow is actually getting a little bit of a bid. AMD is getting wrecked from the pre-market. It was pushing 550, now at 545. That's only up about 1%. Nebius down about 5%. Nokia, that's down 0.5%. Penguin Solutions, that's down 1.3%. SK Hynix, again, South Korea, was down yesterday, 6%. SK Hynix right there down about 4.3%. So the entire index in South Korea was down. So that's putting some pressure on the memory names. But as soon as we opened, dude, it seems like everything in the semi sector just took an ugly hit. Broadcom down 1.3%. Maybe it's just Friday algos. Friday algos tend to do a bunch of different things that are relatively weird, but you have that all at once. ARM is the only thing that's up. AMD is the only thing that's up with ARM. Intel loses the entirety of the 15% pump yesterday. Is space dumping. Rocket Lab is getting a little bit of a hit. That's down about 2%. SpaceX was pushing 118 pre-market. That's at 116. That's going down. HIMS, is there news on HIMS? I don't see the news, but that's up 4% on HIMS. I don't see any headline right there, but that stock's up 4. AMD's up 1. ServiceNow's up 4. Palantir just went red. So not all the software names are participating. D-Wave's down. INFQ is down. Salesforce is up. Adobe's up. Zeta's up. Actually, a lot of software names are up. Palantir is the one that's not up, which means I'd expect that to technically flip if the other software names are running. How about Microsoft and the Mac 7s? Microsoft goes up as that's part of IGV. Oracle goes up. That's also part of IGV. The Googs was down 7% yesterday. The Googs is up about 0.36. Nothing too crazy right now. Tessie, yeah, it's not much. 320. It was at 315 yesterday. Just not that big of a move on Tesla as well. How about Meta? 604. That bounced from 597 yesterday. And then Apple is at 325. Okay, so you're seeing an immediate dump as the market opens for the semis. Some of the software names are getting some of the green. Bloom Energy as well, down about 3% right there. AMD is $1 away from flipping red on the day. Reddit is up about 1%. Reddit's obviously had a bad week. Marvell's down 2%. Netflix is also down 0.5%. I don't know why the NeoClouds tanked as soon as the market opened, but I would imagine if all the semis are going down, the NeoClouds are going down with it. I think if anything, Jensen tweeting about open models is really bullish for the NeoClouds, given the partnership he has with all the NeoClouds. So it kind of felt like that was a manufactured dump as soon as the market opened to get out of some of these positions. Jensen, by the way, is now 8,257 followers. Robinhood, are we down 4%? Wow. Wow, dude, 4% within 4 minutes? This was at 103 yesterday. 97.35 right down. So this is where Robinhood bounces. Yesterday it bounced perfectly. If anyone was looking at the Robinhood chart yesterday, it went from 98 to 103 after falling from 105. So it had a perfect V shape, like 30 more cents, and it would have been 100% perfect. I wonder today if it pulls the same thing or if it's legit gonna chill out in the 90s for the whole day if the market wants to go down a bit more. Nebius down about 3.5. Broadcom down 1. ServiceNow actually having a good day, up 5, still well below the price it was at before earnings. But that stock is down. Why is Intel down on earnings? Intel had a phenomenal earnings. We talked about it earlier in the show. Intel actually just flipped green at 101. AMD also starting to flip green as well. AMD is really moving with Intel, or it has been at least for the past 24 hours, given those earnings. If I had to assess why Intel's down, honestly, it's a boring reason, but it comes down to the valuation, because their growth is great, but the sustainability of that growth, you need to really look far into the future and say it's going to keep happening year after year after year to pay the multiple that it's trading at. With AMD, I think the sustainability of their earnings is like a bit more obvious, just given how developed they are. Whereas Intel, the foundry business is still negative, so I think there are some fears of that. But theoretically, the stock should be up like 10%. Like, that was a blockbuster quarter. It's just the stock is also up 5x in the past year. So, it once again asks the question of how much premium is the market in this environment with oil the way it is. Intel right back under 100, just lost $2 in like 5 seconds. How much of a premium is the market willing to pay? That is the question. Amid, how are you viewing Google's free cash flow trajectory given their updated capex? Is the near-term cash flow margin pressure enough to make this a name you're avoiding? So we talked about this a lot on Basis Points as Robinhood continues to go down. I don't know if there's a headline there, but that one's getting hit. I think Google deserves to be up because they're growing, because they're spending the capex. But it doesn't matter what I think. The market doesn't like the capex spenders going up because they're spending on capex. So my genuine thoughts on all the Max 7 is if you are buying them, you are probably going to deal with some level of underperformance like all of us have had this year. If you bought the Max 7, right? A lot of them have underperformed the S&P 500 outside of like Apple. But long term, they will be absolute cash compounders. And in the short term, if the market is moody and doesn't want to give Google the benefit, as AMD now flips red, loses 540 for their capex to their revenue growth, then it is what it is. But in the short term, that's fine. In the long term, that'll happen. Having said that, Google below 300, Google to 250 is absolute load the boat. Google below 300 gets very interesting. Google at 320, I think you're going to get dip buyers. I just think if the Max 7 keeps spending on the capex, the market's not going to care about wanting to buy the dip. As Intel goes down 2.3%, that one also taking a pretty big hit. So it's a very important question with the Max 7. We talked about it a lot today on Basis Points, but I don't know, man. I don't know if the semis and the Max 7 can actually run together at this point, given how selective the market's being. Maybe by the end of the year, everything's perfect and the market says, okay, they can all go up together. The companies that are spending can go up because they're growing. The companies that are getting the money can also go up but at the end of the day, there's a limited amount of dollars. And I think that's where the market has been struggling with for so long about where to allocate it. Nebius loses 210, wrecked. Hood, wrecked. AMD officially goes red, loses 540. T1 Energy, wrecked, 550. That's down 3%. Just the classic Friday dump to start off the day. Micron right there, down 3. Did Amcor actually lose the entire pump? Wow. Amcor was $80 yesterday, bro. $81.70 on that partnership. And, look, I was happy Amcor was up yesterday, but if I'm being honest, the partnership also, I didn't get what was so exciting about it. NVIDIA's giving them $1.5 billion loan to expand their facilities. It sounded very similar to what NVIDIA is doing with a bunch of the neoclouds in terms of securing prepayments. So I guess them working with NVIDIA is super important, but they've been working with a lot of the industry players. So it was one of those things where I was like, okay, the street's that happy about it, 20%. Kind of felt like it would get faded, and obviously on a bad semi day, it's getting faded. If anything, it shows Amcor has a lot of long-term growth, but 20% because NVIDIA gave you a loan, or NVIDIA, gave you some prepayments, it felt aggressive. And obviously the knee-jerk reaction of that aggressiveness has now been taken down. And the only reason it felt aggressive is because all the semis have been rejected at every catalyst that was positive, right? So why does Amcor get to go up 20% just for the hell of it? And obviously now it's not. And Nebius right there down 5.7%, as that is also getting hit. Marvell, 3.8%. This one continues to go down. JP Morgan, that's down 0.5%. SoFi, that continues to go down below 17. Cleveland Cliffs actually had a really good earnings yesterday. That's why that stock was up yesterday and up another 8% today. In fact, if you listen to their earnings call, I listened to a little bit of it last night. They explicitly said Palantir was the reason for why they crushed the earnings, which is pretty incredible. I actually met the VP of Cleveland Cliffs at AAPCon a few months ago. So this is a company that works in steel. It's been consolidating for a long time. They're getting a nice little breakout right here on a pretty big earnings beat. And they're attributing a lot of that to their relationship with Palantir, which, once again, proves the sort of transformational value argument that Palantir has been talking about. But the market is not caring too much about it. 123.35 on Mr. Palantir's. CoreWeave down today. CoreWeave is down 5.7. Loses 82, just like that. Celsius just fell off a cliff. Celsius down 1% here. Yeah, again, this is why I asked the question last night on X and asked the question in the morning. The only reason Adobe's up today is because the semis are taking a hit. That's it. It's becoming comical at this point. It's genuinely becoming comical. Why was Adobe down for the past 3 days? Because the semis were recovering from a really bad week they had last week, where they all were down 15 to 20%. Why is Adobe up today? Because Nebius is down 5%. It's almost unbelievable how programmatic this is, where one stock goes up, the other stock goes down. Why is Robinhood down 6%? It looks like it wants to go back to the low 90s. It was at 103 yesterday. Vlad did get hacked yesterday on his account, and he pushed the meme coin, which was not a good look, but nonetheless, he got hacked. It proves why cybersecurity matters so much. But goodness, dude, we're taking this from 103 to 95 today. MXL, they had a decent earnings, Max Linear, but once again, this stock was up 390% going into the print. So, you know, you buy a stock that's up that much, even if the earnings are good, the stock could fall just for the hell of the stock falling because it's run too much, 16% down as that's taking a hit. Yeah, Intuit is up because the semis are down. I don't think there's a fundamental reason why QuickBooks gets a 5% move today. Like, it is crazy, bro. It's like if you see Micron down 3% or AMD down 1%, as we're seeing AMD get hit right now, you know Intuit and Adobe and IBM are probably making a move. IBM right there up 2.3% as well. Maybe because Bitcoin's going down, that's bad for Hood. But Bitcoin is, I mean, yeah, that's fair. I know they've started to diverge. But, I mean, you know, Bitcoin down 1%, Hood down 6% on that. That feels like they're way too correlated. I really wonder if Hood bounces here. Yesterday was a textbook bounce, and it went right, it did a full V shape. I really wonder if that happens here, or if this thing is just going to stay below 100. AMD is really feeling it now. 555 to 531. Is that one just straight red line down? Intel also straight red line down, 97.13. Down 3%. Kathy Wood, by the way, bought 160,000 shares of Tesla yesterday. SpaceX down 3%. That's taking a hit. Rocket Lab down 3%. That is taking a hit. Again, Amcor losing every last dollar of gains that it got yesterday on that partnership. The other thing I've been seeing from people that, you know, they don't like to see, which I agree with these concerns about the broader market, is if companies can't go up on good earnings or good catalysts, it means the stocks are broken right now. And the reason the stocks are broken is because nothing is changing fundamental narratives, nothing is changing sentiment shifts, and nothing is changing catalyst-driven momentum narratives, which was the basis for the entire stock market over the past few months. And so that doesn't mean the companies are broken, the businesses are broken, but it does mean these stocks have either priced a lot of it in or just don't care about new catalysts, and that means they're in consolidation period, which typically is, you know, the best time to nibble, because you're buying stocks that have really good momentum, even if their stock prices aren't reflecting that momentum. But nonetheless, it means that, you know, the prices end up going down. Oracle right there down 1.2%. That's down below 120. Tesla 318. That's also down. Could it be priced in? Yeah, I mean, it could. Same thing with Intel, right? Intel is a $500 billion company, and they're not producing that much profit. So it's growing very nicely, but one could argue, hey, we've priced in the level of growth they have, and now they need to keep growing into it, which is a fair thing for the market to say. But it also means that those stocks don't get a move. Micron down 4% now. Okay, so this is obviously a day where the market is definitely going short. I wonder if things flip. I wonder if things flip here. NVIDIA, that's down as well. AppLovin got just devastated yesterday, continues to go down today. This thing was pushing 560 a few weeks ago. Now back to 394. Let's refresh Jensen. He is now at 13.8 thousand followers. And he put out this letter on X for the first time today about open source models. The age of AI can be one of prosperity. With the right choices, open weight AI can expand opportunity, strengthen competition, extend American technological leadership, mitigate risk, and ensure that the benefits of this extraordinary technology are shared broadly across our economy. The future is worth building. The United States should lead in building it. Oh, they put Palantir's logo on it as well. They put a bunch of logos at the bottom of this letter. They put Palantir's logo. They put Hugging Face. They put Perplexity. They put Meta. They put CrowdStrike. They put Microsoft. They put Dell. They put ServiceNow. Are these just the companies that, why did they put these companies here? Oh, it's probably because they're working on open source stuff. CrowdStrike, Box, Replit, Reflection, Dell. I was like, did Jensen just pick his favorite AI companies and put them at the bottom of the letter? MXL down 16% right here. It's the one he owns. Where's Marvell then? Because I love Jensen, but he created a generation of baggies on Marvell with his little $1 trillion comment. He needs to do something to pump Marvell. Iran down 4%. That one's getting hit. 1 million followers before end of day? No, I don't think he's getting 1 million followers today. I think he will get to 1 million. I think it'll be like 50 to 100,000 today. Maybe that's a little too conservative. I think it'll be like 1 million in like a few weeks. I think it'll be a few weeks and then you get 1 million. Then again, it is Jensen freaking Huang, dude. Maybe it happens by like tomorrow. Palantir 123, that's down. Celsius down 1.5. Damn, bro, what a Friday open. Like the pre-market was a little red, but it wasn't that red. It wasn't like 5 to 7% down on every high beta name. Rocket Lab, look at that, 3.8% as that one continues to get hit as well. AMD loses 530. 529. I wonder where this one stops. I don't think it's actually going down to the like low 500s. That would be a little crazy. But who knows at this point. CoreWeave, that's down 5%. Palantir, that one's still down as well. Up, we just got PMI. Let's pull that up. S&P 500 at 739. S&P is actually green, even though everything else is down. Nebius down 8%. Once again, it's, you know, the past few months have been these stocks take a 1 or 2% dip. It gets eaten up within minutes, if not hours, maybe a few days. And now it's like they go up, they go down, they go up, they go down. You think you're out of the blue, or you think you're out of the woods, and then boom, you're as a stock like Nebius is taking that hit. All right, so PMI, we had 53.6 versus 51.9. That's a beat. Manufacturing PMI, 53.8 versus 54.4. That's a miss. Services PMI, 53.6 versus 51.2. So you have 2 beats and a miss on PMI. I don't know if the market is going to react that aggressively towards PMI, especially on a Friday. But it is a little bit of a beat on one of them and a miss on the other. Cerebras down 7. I feel bad for Cerebras if you bought at 240 yesterday, because this thing pumped to 240, probably got a ton of people excited about that AMD partnership, and it lasted for like a minute, and then it just crashed right back down. It was one of those headline-driven things where, you know, momentum took it up and then immediately just crashed right back down because, you know, theoretically the partnership with AMD is cool, but it's not like changing their earnings tomorrow. Rocket Lab giving back all of it, 4%. I mean, Rocket Lab was really holding on to 70 yesterday. Today it's just giving back everything. Nebius, wow. Are we actually going to go from 230 to below 200? Unbelievable, dude. Unfreaking believable. Google up a little. Is there Apple news? Apple is refreshing their MacBooks, but we talked about that yesterday. I don't know why it's up here, but if I had to guess, whenever high beta goes down, Apple gets the safety. When high beta goes up, people sell Apple to get more alpha. When they go down, people go to Apple to get more safety. I would say that's theoretically what could be happening today. Palantir looks weak. Palantir looks really weak. ServiceNow somehow is holding. ServiceNow more holding with Adobe and Salesforce. Palantir looks like it wants to, like theoretically, Palantir should flip green here with the other software names, but it's just looking like it wants to go down. Zeta, that looks weak as well, 1950, below 20. Meta doesn't look the best either. You can do nothing but laugh at this price action. Yeah, I mean, dude, imagine buying into Nebius at like 215 this week just because you're like, all right, you know, the worst of it has happened. And then today, just back to 203. Like, why? Especially after you get the most bullish third-party CapEx-related data center comments by Google, which is super bullish for the neoclouds. And then Intel and AMD tell you that, you know, the market's only increasing. Wow, 525 on AMD here. It's like those should be sold off. And why is Google up today? Because the semis are down. Like it's this game of ping pong at this point. It's a game of pingy pong. I did see that headline yesterday that SpaceX is turning away satellite launches, saying they're booked until 2028. This is good for Rocket Lab. This is good for Blue Origin. This is good for a bunch of those space companies. Space names still taking a hit today, as ASTS also goes down 3%. Again, look, I think most of us at the end of the day, although we manage portfolios in the short term in certain ways, you know, if you're a long-term Google investor, I don't think you can be upset about those earnings. I don't think you, quite frankly, have to care about it. You're probably annoyed that it's not up more, but it's one of those things where, like, you believe in Google, you're going to believe in Google for a long time. And so I don't think anything changes. I think the broader problem with the semi names taking a hit like they're taking a hit, especially the NeoClouds and the Picks and Shovels, is I don't know if people have the conviction they have on those names like they have on a Google or a Meta or a Microsoft or, you know, a Palantir, a Shopify, names that you know will be around in 10 years. Because I think a lot of people are still questioning, will a lot of these semi names be around in 10 years? So when they go down, people start to feel, is what we talked about in the morning, that, oh, it's collapsing, everything's over, like I need to get out, I need to run for the hills. You don't see that type of volatility as many times with that type of sentiment on the Mag 7 because we know these companies will be around for long term, even if they're not outperforming this year. And that exacerbates the sell-off on something like a Nebius getting at 9%. But then if Nebius goes up 9%, everyone chases it because they're like, or a Micron or ARM or whatever, because they're like, oh my goodness, this is the greatest revolution ever. I need to be in these names. And so when you have one day of this is the best ever, and then one day of like, I need to get out of this, it just creates such vertigo in I think, you know, the emotions that people are dealing with, which also leads to these crazy gyrations. Tesla losing it here as well. 315. If we lose 314, we will officially be lower than where we were yesterday. If we lose 314, ServiceNow also getting a few red candles, still up 4%, but it is starting to come down to just a little bit. Rocket Lab officially loses 67. Yeah, we talked about the Trump tariffs going from 10% to 12.5%. Unfortunately, the problem here is that's probably going to put some more pressure on inflation if oil doesn't chill out. American Express, by the way, I don't know what they said to get this thing to 5.6% down. The earnings look fine, but it is. Ken Turo says, I'm just utterly amazed by where Tesla is at this point. Yeah, I mean, look, the reason I'm amazed at where Tesla is that they've had bad earnings for like 3 years. And yesterday was the day the stock finally broke. So it's one of those things where it's like, why yesterday? What happened, or 2 days ago? What did Elon say that finally got the market to be like, this thing is not worth what we think it's worth? I mean, another 180 billion down, Tesla's below $1 trillion, which is kind of crazy. Nebius, 9.2%. Taking a hit right there. Amit, I'm really fed up with this shit. Look, I don't blame you. You are very valid to have the emotions that you have about how annoying all of this is. I think it's fair to be upset and annoyed, but it's also part of, wow, AMD 520. It's looking like they want to send this thing to the low 500s, even though that on an earnings like Intel had would be kind of crazy. But yeah, it's valid to have those emotions, right? At the end of the day, we're human beings. Stock market is emotional. Emotions is quite frankly what creates the alpha to the upside or downside. But, you know, this is what it is. This is part of why I think basis points today will be really timely for a lot of people. We had a real important conversation around, you know, why this rotation keeps happening and if the market can actually have both sectors, semis and Mag 7s, or put software with the Mag 7s, participate together. And my opinion is a bit more skeptical of that, which means some days are really good for the portfolio if you're leveraged semis. Some days are really good for the portfolio if you're into the Mag 7s and software. But there's been very few days this year that have been good for everybody. And that's the bigger issue. SPY officially goes red. SPY is barely down because the financials and healthcare are still holding. And Tesla and Google already had their decline yesterday. Remember, SPY fell 1.5% yesterday. It's not like SPY didn't have a great yesterday. Right? SPY already took a big beating with Google and Tesla falling, as those comprise about 4% of the S&P together. And Google and Tesla, you know, aren't down as much today, so I think that's why it's relatively flat. Google actually recovering a little bit, up 1.3. Nebius loses 200. Boom. Wow. 230 to 198. in a day. AMD 518. I wish I could give you guys a better reason for what's happening here. I mean, oil's actually down in the morning. Actually, it just spiked up. I mean, it went from 93 to 89. Now it's back at 90. So maybe that's, I don't know, that's maybe part of the reason. I actually like Hood below 100 going into earnings, though. Like, I'd rather it be like 95, 94, which it looks like it wants to go below 95 right now, versus being at like 110. It's just easier for it to make a move. But man, it's obviously not going to go up on a day where all these semis are taking a big hit. Okay, I want to see now if we have any resemblance of a bounce, because Nebius down 10, like this thing was at 160 a while ago, but down 10 I feel like is enough damage. I wonder, is this one of those days where it just waterfalls down, or like we put in a little bit of a short-term bottom and not V-shape, but we at least have some level of stopping the bleed, or if this thing just keeps falling back. Oracle down 3%. CoreWeave obviously taking a hit as well, down 7.5%. The Qs are down much more than the S&P. Paul, thanks for the super chat. Do you think the market is trying to get ahead of potential massive state-by-state data center bans? Every week we hear more about bans somewhere. I don't think so, dude. I really do. I don't think the market cares that much about like New York banning data centers. Because again, we're already so constrained. If anything, the market should like that, because we're so constrained that if another state comes out and says, hey, we're not going to allow any data centers to be built, guess what? That creates even more demand for energy and all the different components and land infrastructure that goes into building data centers, which means these stocks are in more of a constraint, which has been the entire narrative on the picks and shovels. I think the market is more flustered with the broader story of CapEx. And if there is a genuine ROI they're seeing on the CapEx, which I think based on this Google earnings, it's obvious we are, but nonetheless, that's the market's perspective. And they're annoyed that these companies are going free cash flow negative. But at the same time, they also want the spend, because that's what keeps up all the semis uplifted. So I kind of think the market really doesn't know exactly what it wants right now, because theoretically, all these semi names should be pumping like crazy after Google's CapEx announcements. And the only reason Google's up today is because all the semis are not pumping like crazy, which doesn't make any sense, because Google said they're going to go negative free cash flow for the next few years, which means, you know, why would the market take it up? It's like, why did the market take it down yesterday and take the semis up, and now take the semis down yesterday and take the hyperscalers up? Like, nothing has changed in the past 24 hours outside of oil going up. If oil going up, then everything should go down, right? So you like fight with yourself back and forth to try to come up with an argument. And like, there isn't one. And it's very hard to. Amid the Tesla price action is weird. High oil prices should increase EV demand. You know, I've seen this argument on Tesla, and I think conventionally it makes sense that higher oil prices should be bullish for Tesla. But I'm also doubting, and let me just know what people think, if you feel the same way. I'm doubting that people see high oil prices and they're like, I want to go buy an EV. Like, I think that's something that happened years ago. Now, I think if people see high oil prices, they're like, all right, I'm just going to have to pay it. Like, I don't think people are like, oh my goodness, I need to go get a Tesla because of high oil price. You know what I'm saying? Like, maybe I'm like, I didn't buy a Tesla because of high oil price. I bought a Tesla because I wanted self-driving. So I don't know. I don't think oil going from $3.50 to $4 at the pump makes you be like, you know what, I need to buy a Tesla. Some people will, but I don't know if that's the catalyst. And I definitely don't think that's going to save the stock, because the problem with Tesla is their margins, not even their production and deliveries. The other thing that really hurt Tesla is Trump taking away that damn EV tax credit. Because I'll tell you what, I would have not bought the Tesla if I didn't get $7,500 off. No way in hell would I have bought the Tesla if I didn't have the EV credit. Trump taking that away, I think, actually is potentially a bit more detrimental. Yeah, also, oil's got to stay higher for a long time, I think, to create that habit. I mean, if oil keeps gyrating between 70 and 80, I don't know if 70 and 90 people feel that compelled. Rocket Lab down 4.74 as that goes down. Yes, and thank you, Parzival, for saying this. This is the number one argument that I always talk about when it comes to this Tesla argument. The electricity infrastructure you put into your EV also comes from fossil fuels and natural gas, and building out an electric grid requires a ton of oil. The price of oil absolutely affects the prices of electricity. So, just because oil goes up doesn't mean that Teslas are insanely cheaper, because you might have to pay a little bit less at the EV charger. So I've just never been compelled that that's a reason for why people would go out and buy Tesla. Nebius, are we back over 200? 198 up to 201. Let's see if that can get at least back up to 205. Or if this one ends up taking a hit as Intel continues to go down. Brent is also above 100, folks. That's also, I think, what the market is a bit scared about. It closed above 100 yesterday. Oil still is at 90. Jensen now 27,000 followers, 28,000. So far, he's following Michael Dell, Mark Zuckerberg, Tim Cook, Satya Nadella, Elon, Sundar, Sam Altman, Dario, Jassy, Benioff, Lip Butang, and Bill McDermott. Dude, he followed Bill McDermott. Followed a software CEO. Could you guys imagine if Alex Karp gets a Twitter? I don't think he ever will, but man, if Karp got a Twitter one day, well, that would be crazy. CoreWeave still taking a hit, down about 6.7%. He's not following me. I don't think he will. Yeah, so I said 50K today. I think it might be more than 50K. He's already at 29,000. It's been 30 minutes. It might be a lot more than 50K. Dell right there flipping green as well. Nvidia trying to get a move. Okay, maybe that was it. Maybe that was the extent of the pain. AMD down 3%, but pulling up from 517 to 522. We talked about Verizon and Google and the billion-dollar data center plan they had earlier in the day. I think it's bullish. I think it makes sense. We talked about the dark fiber stuff earlier in the week, right? About what NVIDIA is doing with dark fiber as well. But I don't know if that's going to be enough to move Google stock or Verizon stock. Although Verizon did have a relatively good earnings. 45 is what you have on Mr. Verizon. Mountain, thank you for the super chat. Hey, Amit, the hood chart on day looks like a Head and Shoulders, right? And I'm seeing things. I think you are right about this. The problem with this going into earnings, and even Jason has said the same thing many times, is the technicals really don't matter a few days before earnings. Like, earnings is such a fundamental catalyst that whether hood was 100 or 95, like, earnings are just going to really determine, where the stock ends up going from here, which is why, we tend not to do technicals on TT for the earnings that are coming up a day later, because it just doesn't matter what pattern the stock is taking. Having said that, I like it below 100 because I think if they beat and raise, they can get at least a pump, so it is green on that day, and that pump can then compound. But like Intel, right? Intel was down going into earnings, but Intel was still up a lot from the last. I mean, in last earnings, Intel was at like 63. It was at 100 yesterday. It wasn't at 140, but still, the fact that it was a lot higher than 63 meant that the bar was very high. Intel now down 4% right there, as that one continues to get hit. The only fear I have for Hood is that, the expectations, I think they're going to beat them, but how aggressively will they beat them? Because look, they had a good Q2, but last year they were beating by like 70% because the comps were so good in 2024. Like, it was so easy to beat them. They were putting up $1 billion every quarter, and in 2024 they were, doing $500-600 million in revenue. So they were having massive beats. This year they have to beat $1 billion, and even if they come in at like 1.2, that's only a 20%, year-over-year growth. So it's like, it's good growth, but is it enough growth? Same question that Intel had yesterday. Is it enough sustainable growth for the market to be like, yep, this thing deserves to go higher? And that, I don't know. But I do think Hood has diverged itself a lot from Bitcoin, which was the biggest problem it had this year. Broadcom down 3%. SK Hynix down 7%, dude. This thing is close to IPO prices at 158. Oracle down below 118 as well. Memory chips are down. We talked about it this morning because of Kospi being down in South Korea. The reason Kospi was down is because of a leaked note from Morgan Stanley saying that they have turned bearish on memory. A lot of people have refuted that is inaccurate and that report is from years ago, which maybe it is, maybe it's not. I mean, we still need to figure out what the truth is about that. But the point is that the sentiment of a bearish analyst coming out and saying the memory trade is effectively over, which is the conclusion from that note, was enough to take down Samsung and SK Hynix 8 and 9% yesterday, which just shows how fragile the trade is, right? Like if some influential analyst thinks that memory oversupply is coming and prices aren't going up anytime soon for DRAM and NAND, then boom, like people just sell it off. And so it's a highly leveraged country on two highly leveraged companies on an idea of supply demand continuing to persist that gives them pricing power. As soon as that idea breaks or people stop believing in that idea, it feels like the stocks break and then the index breaks. And that affects the American memory companies because, you know, they're also correlated. Which is the problem here. So I don't even think, you know, even if the note is not real, it's like, that's not even the point. The point is the fact that people believed in the potential of a sentiment shift based on some note, whether it's fake or not, and that cracked the trade down 8% is just like, it is so fragile on the assumption that memory continues to be in less supply versus more demand. SpaceX right there, that's down 3%. Here is an update on the tariff stuff that Trump rolled out yesterday.
Administration. Eamon Javers joins us with the latest on the trade war and the physical war. Eamon.
Yeah, that's right, Leslie. CENTCOM says U.S. forces completed the 13th straight night of strikes against Iran last night. They were targeting Iranian military command centers, drone storage facilities, communication networks, they say, coastal surveillance sites, and maritime capabilities to, as the U.S. military puts it, further diminish the threat Iran poses to civilian mariners and commercial vessels transiting the Strait of Hormuz. Now, that comes after President Trump told Axios that he's considering a massive attack on Iran that's bigger than anything that's come before. And while it's clear that the U.S. is considering military escalation, it's not clear what form that could take. Would it be boots on the ground or what? And it's not clear how that would change the political reality in Tehran, which is the key to all of this. Now, separately, the new tariffs that you're talking about went into effect at 12:01 a.m. this morning. These new tariffs are being imposed under Section 301 of the Trade Act of 1974. It's one of several trade authorities that the president has used over the course of his term. They took effect, as I say, at 12:01 a.m. They imposed duties of 10 to 12.5% on 60 economies over what the U.S. describes as forced labor practices. And the announcement marks the administration's latest tariff action after suffering that major legal setback earlier this year when the Supreme Court largely struck down President Trump's so-called reciprocal tariffs. So, guys, this is one more effort after that. We saw the reciprocal tariffs struck down. Then we saw the temporary tariffs put in place. Those expired. And so now the president is on to his third effort for a tariff regime. The president very convinced that the United States needs a big moat in terms of trade around its economy. Back over to you.
Although, correct me if I'm wrong, Eamon, I think in June, did the government hand out twice as many refunds as they collected in tariffs?
Yeah, the refunds started really flowing out through the spring, right? And you had this moment where it was not clear whether companies would apply for those refunds or not. The president was suggesting, he didn't want companies to apply for the refunds. He wanted them to just let the money sit in the Treasury. At the end of the day, that just wasn't tenable for a lot of CEOs. They started pushing for the money, and it did start flowing out. The question here is these new tariffs are based on the allegation that these other countries don't have robust enough protections around forced labor. Their legal system isn't good enough. They're not enforcing it. There is forced labor in the pipeline of their supply chains, and so therefore the U.S. can impose these. That's going to be challenged in court, and the administration is going to have to defend itself. So companies, if that is struck down, companies will be in a position where they are teeing themselves up for another round of tariff refunds at some point in the future. But all of that very unclear right now. The administration is confident they've got the legal boxes checked here and that this one will hold.
I am struck, Eamon, by the level of the tariffs, so 10 to 12.5%. That's a little bit lower than the president has sought in the past. I don't know if that's dictated in the statute or if that's just sort of maybe a zone that's a little bit less onerous or cause a little bit less of a market impact.
Yeah, I mean, you can see the president likes that 10% across the board number as sort of a general benchmark. And then he likes this idea of imposing higher tariffs as needed on sort of an ad hoc basis. You saw those 50% tariffs against Canada the president talked about earlier this week, in response to what he views as Canadian intransigence on a lot of trade issues.
Yeah.
So the president wants a baseline, and then he also wants to be able to increase with spikes and target in a diplomatic way people around the world he thinks are not doing the right thing.
Yeah.
Okay, so these tariffs and strikes you could call general macro headwinds across the entire market right here. Now Google's losing it as well, getting a red candle. It got up to 324, now at 320. Robinhood's still wrecked. Intel still wrecked. A little bit of green coming in on some of the semis, which is why you're seeing the red candles on the hyperscalers. But you do have Mr. Nebius right there back above 200, although it is obviously still down pretty badly for the day. Palantir losing 123. Marvell loses 200. Well, Fridays tend to be ugly. Many times, especially when there's so much high beta momentum, and it looks like that is that's happening. Jensen now has 45.6 thousand. Yeah, this thing might get to 100K tonight, if not more. Jensen Huang. By the way, Galaxy Research, they just came out. The Clarity Act, they have cut their probabilities from 50% to 30% for the Clarity Act actually being passed this year. That's also probably a little bit of the stress that we've been seeing on Bitcoin right here. So they are assuming it does not get passed in 2026. Axios, President Trump will meet Prime Minister Netanyahu in the White House on Tuesday. Netanyahu will attend Lindsey Graham's funeral ceremony. And he will meet Trump on Tuesday, arrive to Washington on Monday. The big headline yesterday was that Trump is basically saying Israel will likely be involved in an attack. The headline is that the attack is going to be one of the worst attacks that, or one of the largest attacks that Trump has ever initiated on Iran. If he does it in partnership with the Israelis, then obviously we are escalating again, and that escalation is something the market is going to have to navigate and deal with. But this is also probably the reason why I think this entire week has been weird for stocks. If we're legit doing what we did back in March, if there's the threat of boots on the ground, if the idea of a ceasefire is not even in question at this point, if the Israelis get involved and we go back to attacking, then what does that mean for the stock market? Because last time that happened in March, we fell 10% on the S&P. So really, what does that mean for stocks? Celsius right there down 2%. What does also that mean for oil prices? And then what does that mean for the 10-year bond yield? What does that mean for how the Fed is thinking of interest rate hikes? I think those are all those questions that are creating a bit more uncertainty around the market. The Oracle Pentagon contract I thought was a nothing burger, guys. $7 billion over 10 years. Oracle is sold to the government forever. So I don't think that was something to be super excited for last night. Like the Amcor NVIDIA partnership was a bit more interesting than Oracle getting $7 billion from the DoD. Like at this point, Oracle needs to prove to the market that the data center capacity they're building has a customer for it, because it feels like the market doesn't believe they have a customer, or Oracle needs to deleverage, because I think the market is so afraid that their bonds are now yielding 8%. Like the credit default swaps in Oracle are crazy. You can get double what you get on a 10-year in Oracle's debt, which obviously creates, there's a lot of risk you're buying into, but still. So I don't think the $7 billion really meant that much. Granted, if all the semis go red, then this one's going to go red as well with the neoclouds. New home sales were a bit better than expected for June. 628,000 versus 607,000. Unfortunately, the mortgage rates continue to climb higher, which is why Opendoor Do people still believe Open Door is going to $82? Because I know we had that little detour back in August of last year, and I know there was a lot of belief. You know, it's funny. One of the guys on Open Door's board of directors, he bet some random dude on Twitter $100,000 that Open Door in a year would have a higher market cap than Shopify. And I just really hope the board director actually follows through on his promise, because that guy deserves the 100,000. Because if a board director was stupid enough to say that Open Door will be as valuable as Shopify in a year, he deserves to lose that 100 grand. Like, this is the type of nonsense euphoria that was going on with this stock. Shopify's $144 billion market cap, by the way. So Open Door has 1 month to go from $3 billion to $144 billion. But like, you know, this was the thing with this stock. And even if interest rates went to 2%, I don't think Open Door would have been at $82. They don't make money. So many of those housing names have just been wrecked and, you know, really have not gone anywhere in this market. Nebius 198, once again, losing 200. Once again, losing 200. Why is the Clarity Act so hard to pass? What is the problem? I think it's I think it's parts of Congress don't like they don't like having either regulation on crypto assets because it legitimizes them, or they feel it's way too competitive with the banks. My goodness, Hoodie down 7%. Getting wrecked today, 94.90 here. Complete reversal to the downside. Intel down 3. Nebius getting hit. Whatever little bounce we had for the past 5 minutes, that is out the window. That's not happening. But yeah, the bank lobbying and, you know, many of these parties just not excited about it, I think, is the biggest issue. Okay, are we going to 90 on Hood? Are we going to 189 on Nebius? Let's see. How low do we have to go? AMD bounces up to 530, now right back down to 524. App Lovin down 3, SpaceX down 4. Rocket Lab obviously is going to go down if SpaceX is going down. Look at that, 7% on Rocket Lab. One ugly day for SpaceX, and this one takes the hit as well. Where's Micron? We haven't looked at Micron. Oh my goodness, dude. 921. What do you guys think? Is she going below 900 today? Like, just psychologically, that would be... And again, I really don't have a headline today outside of the Iran stuff getting a bit more aggressive. Maybe that's it. I mean, truly, maybe that's it. Maybe the market is front running. Look, this war is heating up again. We don't want to be part of it. Tesla, $312. That's kind of crazy, dude. Like, that's kind of wild. Open source is bearish. But for who? I don't disagree with you that open source is bearish, but I think it's bearish for Anthropic and OpenAI. It's not bearish for the semiconductor companies. Open source, I mean, first of all, Jensen's not putting out a letter about why open models are important if he thought it was bearish for all of his customers, vendors, and himself. Now, it might be bearish for two of the model companies, which, again, the reason that could be bearish for the entire market is because the model companies are spending most of the CapEx to a lot of these suppliers. But if that CapEx shifts, and, you know, Anthropic and OpenAI don't necessarily have to be the only ones responsible for that. And again, I don't think Anthropic and OpenAI die because of open source, right? They put some pressure on their margins. I don't know if it takes down the entire industry. I also don't know if Jensen putting out the letter is enough to get the market to be like, yeah, it's completely wrecked at that point, right? 59,000 followers for Mr. Jensen. The market's fearing rate hikes today. Yeah, but again, this feels a lot more like just a Friday dump. Like, nothing really is that different between today and yesterday, other than Intel having good earnings and oil actually technically is down from yesterday. So is the 10-year, by the way. So it's like, I don't know, it kind of just feels a little bit more fabricated versus real. But nonetheless, it's an ugly end to a relatively ugly week. ServiceNow right there up 5% as that continues to go green right there. Again, we are going to have the former Twilio CEO on the show in about 20 minutes, Jeff Lawson. I think a lot of you guys know him. He's now building a nuclear startup. So we'll be excited to talk to him, get his take on if we're in an AI bubble and where the world is going, especially given he's working on nuclear energy. I would imagine his biases towards energy constraints are massive, and we need to do something with nuclear to resolve it. But once again, those constraints are part of the reason why these stocks have run the way they have. Micron down 7, Tesla down 2. Did anyone buy Tesla? I asked this yesterday on Twitter. Put in the chat if you bought Tesla yesterday. I mean, there was a decent amount of people under that tweet yesterday that said they bought Tesla. A lot of them were in the Tesla community, but there were some familiar faces that were like, yeah, I'm taking a stab at it at this level. Options are expiring today. That is correct as well. Satya Nadella did put out an open model tweet as well, and that didn't tank the market. So, why is Jensen's open model tweet responsible for it? Kathy bought 150,000 shares yesterday. That's correct. Okay, I see like 10 of you that said you bought. Most people saying no. Once again, the thing about Tesla is like, are they really going to let it get that low? Or maybe they don't let it get that low, like 270s, but they keep it in this range. Like what if the new, the range for Tesla was like 370 to like 410? What if the new range is like 300 to 330? I mean, because Tesla has been range bound many, many times, and it stayed range bound. So maybe that could be happening here. Everyone is hiding in Apple. Yes. Whenever the market has a bad day, they go to Mr. Apple here. I mean, pretty much every stock looks like it's in a downtrend on the daily. Some of your software names doing okay, like a Shopify, ServiceNow. Marvell looks ugly. It's just, I don't know if these are shorts right now. I mean, like, they've lost so much already. To assume they're going to go down another 5% today would just be asking for a lot of pain after we've already had it. Pat's a little green. There is no news behind Nebius for those that are asking. You got to remember, the neoclouds are part of the semi-trade. If the semi-trade goes down, the neoclouds go with it. Like it's kind of simple, actually. Semis go down, SMH goes down, Nebius, CoreWeave, Iren, they go down. Now, again, I think their business models are functionally better than some of the other names in the semi-stack, but at the end of the day, it's the same trade. It's all momentum. This is why space has correlated so well with the semis as well. Space is really momentum more than anything, which is why Rock Lab's down 5% here. Nokia's getting it. Again, Nokia, 105% year-over-year growth on AI sales, but it's also a semi name. Like on a day where Nebius is down 10%, Micron's down 7%, Nokia's not going. Like at the end of the day, I think if you are in any of the semi names, you're part of your portfolio is basically following what Micron does, if we're going to be honest, because that controls the majority of the momentum. As Tesla, new low of the day, 312.75. If you are in any of the Mag 7s ex Apple, part of your portfolio is basically following what Google, Meta, and Microsoft want to do every day. And if you're in the software names, your portfolio is following the IGVs and ServiceNows of the world. So again, there will be divergence between individual stock performance, but they're all in their bucket of what goes up, what goes down. There's very rare moments of this stock is doing better than the rest of the bucket or doing worse than the rest of the bucket. It's usually within that same price performance, which is why we saw Meta, Microsoft, and Amazon down 3% after Google was down 7%. Google was down 7% because the earnings made it worse because of the CapEx, but the other three that are going to spend were all down the same percentage points. Amazon right there down about 0.5% here today. Can we say we are at war now officially? I mean, I don't think you can officially say it because it hasn't legitimately been declared like it kind of was back in March, although they kept saying it's not a war. But functionally, yeah. I mean, if we're not going to de-escalate, we're not going to have any level of ceasefire, we're not going to have any negotiations, we're not going to have any frameworks to discuss the possibility. I mean, Rubio said it, Vance said it, Trump said it. They're all aligned on the same message that the Iranians aren't negotiating in good faith. Then it feels like, yeah, we're going to continue to be in war. Hims loses 30. Why was it even pushing 35 on the market open? That was a weird 4% move up. What do you think about healthcare right now? Healthcare has been in a trend for the past month, and it's done well. I mean, look, healthcare, the long-term thesis on healthcare stocks is that they are likely going to benefit a ton from AI. And I mean, there's so many partnerships. If you look at Tampa General, Cleveland Clinic, all these companies, obviously many of them have partnered with Palantir, but Tempest AI, like so many different case studies of healthcare companies doing well. By the way, take a look at the heat map here. Financials, consumer defensive, healthcare, industrials, all of those are green today. Insurance, real estate. The other thing about healthcare is, you know, drug manufacturers and drug discovery in the age of AI. Like there's a real thesis there. But, you know, they underperformed for a while until the market started rotating towards them. So the rotation now into those names, you know, you have to go on an individual basis. Is the risk reward really good? But this is also why buying stocks when no one likes them is really important. Like UNH, for the people that were in UNH or people that were in Oscar, when people hated those names and UNH was down 50%, the fundament, I mean, United Healthcare is one of the biggest healthcare companies on the planet, right? So it doesn't mean it has to go back up to the moon anytime soon, but taking a chance on it required some due diligence. But at the end of the day, there was a tailwind that was eventually going to come for it, and it's basically doubled from those lows, or almost doubled. Now, I don't know if it easily gets back to its highs at 650, right? Like, once again, I think the easy money on those might have been made. Jensen's at 75,000 followers. It's been an hour since he's tweeted. SoFi is down 1%. YOI says, man, my birthday is tomorrow too. About to have the worst day in so long. Sorry, man. It always sucks if the market gives you some red on your birthday. But this whole week, right? This whole week has just been weird. I mean, Meta, dude. Meta went from 680 to 605, dude. It's just, you know, Nebius is now feeling it today. Nebius at least recovered from like 180 to 230 the other day. Now it's back at 199. But everyone's feeling some type of AAOI. This thing people thought was out of the woods yesterday. It was up 10%. Now it's down 8%. I mean, it's kind of hilarious. Which is, you know, I played this clip yesterday. I don't know if people saw this, but this is also the only thing you can do when things get ugly, which is, you know, this is what Elon reminds everybody. When in doubt, remember, you're a long-term investor.
Some way to sort of, you know, say like, listen, guys, we're going to focus on 5 to 10 year or longer time horizon investments. This will depress our short-term earnings, but if you take a long-term view, and there are investors, we have many investors that do take a long-term view. In fact, I'm a big fan of the retail investors. In fact, I find our retail investors, on balance, they're very insightful and have very long-term views. Some way to sort of,
I just thought it's so funny because everything Elon is saying is right. There's nothing that he's saying is wrong, but it's just like, you know, when shit hits the fan, you got to remember, like, well, I am allocating capital for the next decade of compounded earnings, which is the intellectual way to say I might be bag holding now. But don't you worry, because in 5 to 10 years, my investment will substantially produce returns that have rivaled the market's expectations. It's the only way to justify bag holding. It's the only way. Meta right there, 605. As that continues to go down. I think the reason people are a little bit more upset at Elon is just because, it's not short-term pressure. It's been multi-year pressure on earnings that have, not compounded. Which I think in the next 2 years that'll start to shift, but obviously the hold on Tesla has not been the easiest. John, thanks for the super chat. In my opinion, the Clarity Act won't pass until banks create a system that benefits them from modernizing their systems. I'm not caught up to everything going on with the Clarity Act and the bull and the bear cases, but I think at its core, you're 100% right. I think the existing financial ecosystem is not going to give up the juicy profits that they have been able to generate simply because of, the crypto bros wanting something cool to happen with stablecoin yields. Like it's going to be a more complicated process. Having said that, you are starting to finally get some congressional members really get on board with it. But the probability is, at least as per Galaxy Research, are below 50% for this thing getting passed. Accenture is actually up today, 4%. That's getting a little bit of green. Zeta's red, and Salesforce is down. Tesla's not that far from 52-week lows. What is Tesla's 52-week low? It is 52-week high is 498. 297 is your 52-week low. Robinhood getting wrecked here as well today, down 7 on the day. Micron down 7. That one continues to get hit. JP Morgan's up. XLF is up. Your financials are up. Unfortunately, your SoFis of the world are not participating with that either. In 10 years, you can break even on SpaceX. Okay, that's funny. That is funny. Again, I think the long-term investing mantra is a reasonable mantra, and it makes a lot of sense. The problem is, I think in finance media, you can't always say that because it's like, why would you care about the day-to-day of the stock market? Why would you keep up with Twitter and watch market open streams if you didn't care about the day-to-day? Now, again, you can care about it while still having the general premise, as SpaceX loses 113 right there, that you were investing for the long term. But like, if you're really investing for the long term, you would buy stocks, delete the brokerage app off your phone, never worry about what's happening to the stock price, because theoretically, if you're not going to sell it for the next 5 to 10 years, then who cares? But no one's actually like that, dude. That's the part that annoys me about the whole long-term thing. It's like, yes, obviously you need to have a long-term view, but we all care about the day-to-day movement for a reason. That doesn't mean we're going to make actions on the day-to-day movement. But to act like you don't care about it, to act like you don't care about what's happening with oil prices and how it affects your portfolio, it's just like you're lying to yourself. You obviously care about it. You just have to, have the discipline to not necessarily panic sell or to not necessarily buy every rip and have FOMO. Because if you didn't really care, you would just, you just buy an index fund, right? The reason you're taking a chance on individual stocks, the reason you do research, which again has been very rewarding for so many of us over the past few years, is to find those opportunities. And quite frankly, I also think it's more fun than like keeping up with sports and, not really getting anything out of that outside of pure dopamine. Whereas in this, you're learning about markets. Like it forces you to learn about interest rates and the Fed and all this stuff that most people don't care about. S&P 500 flips a little green right there, but just a little at the moment. Channing says, I check it constantly and I'm long. I'm addicted. I think that's all of us. Think that is all of us. Himmy Hims. Wow. 9% down, dude. Robinhood's about to go to 93. It's just everything today woke up and decided it's going down. And the worst thing is, guys, I cannot give you a reason outside of Iran war escalating, which maybe it is. Maybe that's the reason. Oh, did Nadella? Hold on. Oh, so this is interesting. So Jensen's letter is not just Jensen's letter. It's a bunch of people's letter, because Nadella posted the exact same letter and he signed it. Okay, so this letter is not written by Jensen. This letter is a general letter that is signed by a bunch of these people. Because Nadella just posted the same thing. Now, Nadella's had a couple articles over the past week on open source as well, right? So all these companies at the bottom of this letter, Palantir, NVIDIA, Replit, Perplexity, ServiceNow, Microsoft, Dell, they might all post the same letter pretty soon as well. Oh, I thought this was a Jensen-specific letter. Okay, well, Jensen's still endorsing it. The 10 years down, by the way. The 10 years down as stocks are going to. That's kind of weird. You would think, even oil, it just fell below 90. Like, this feels so fake. The 10-year and oil are down, and everything decides to dump 8 to 9%. Literally everything. Marvell down 8%. Robinhood down 8%. Intel down 6%. Rocket Lab down 7%. Tesla 310. I mean, it's pretty incredible here, but it feels like it's more geopolitical stuff. Let's get a little bit of an update on some of the stuff going on in the semis by some of the sell side right here.
We actually think the supply-demand imbalance that's out there in 2026 is going to get bigger in 27, not smaller, especially for the memory companies, right? If anything, I think it's going to start extending beyond memory to other parts of the ecosystem. And the simple reality is, as you move AI from training to inferencing, which is happening right now, memory is a bigger bottleneck in inferencing than it was in training. So we think the supply-demand imbalance gets bigger, which means these stocks all are going to prove to be much more durable. And to the extent investors can believe that more, you'll see these multiples keep grinding higher.
You think that this sort of, I guess it's been a bit of fear. We've heard from names like IBM and Starbucks, but this notion of having to have on-premises infrastructure, buying more hardware, less software, kind of reinvigorates what, the Dell and the Cisco trade?
Yeah, absolutely. Listen, I actually think to some degree what you're seeing right now is the decommoditization of the IT hardware stack, of the networking stack, right? It is a lot cheaper, I think, for enterprises to run open source models on-prem versus using frontier models for everything. And to the extent companies start doing that, they have to repatriate data back on-premise, which means they have to buy compute, storage, networking, all that stuff. You've certainly seen Cisco, Dell re-rate on this narrative. We think storage is going to be next as a sector that will re-rate off this.
Amit, I'm sure you get this from clients, but everyone has a mental model in mind of when, the once boring network equipment suppliers become the exciting plays, and the companies paying them the money maybe lose their edge. It feels a little bit like, the internet build-out boom, the broadband situation when it comes to Nortel and Lucent and all the rest. So how is it different? Is it different just in terms of what phase we're in of that process?
Yeah, it's a worry I have, in fairness, for having watched Cisco hit the peak in the late 90s, right? What I'll say is there are a couple of things that are different fundamentally here. One is this boom so far is more driven by cash and equity versus debt infused. This is less about build and they'll come. This is, no, we need to build it because people are already coming here. At a very high level, it's as simple as IT has gone from being a cost center historically to becoming a place for you to generate ROI and better labor savings and productivity over time. And so I think there's a bunch of things that are different. But at the very highest level, I'll tell you, I think you're in the very, very early stages of starting this enterprise build out, which we think will have a couple of years cycle. And the metric to judge it on is not how much you're spending on IT, but really how much you're going to save on labor and productivity over time.
Different budgets. I'm curious, Amit, how you're looking at free cash flow with regard to the hyperscalers and the people who are spending money on chips. We've seen it such that CapEx going higher bodes well for them. And I'm just curious, against that backdrop, as you start to see free cash flow going, kind of narrowing a little bit, does that suggest to you potential issues down the road with regard to, the CapEx expectations?
Yeah, it's a great question. And in fact, I almost think if you overlay it, you're seeing the transfer of free cash flow from the hyperscalers to the memory companies and the broader ecosystem, in fairness. But if you actually overlay it, on side by side, that's literally what's happened. Free cash has gone from the hyperscalers to memory guys off late. Listen, I think to some degree this can sustain. The part that we would be excited about is AI over time. It cannot just be a hyperscaler story. It has to become an enterprise, a sovereign story, which gives it better diversity over as you go forward. So I think you do need that enterprise angle to come in a big way for this narrative to sustain. I would actually argue what IBM told you is to some degree what investors should be doing, which is buy more hardware and deploy on software purchases right now.
Finally, Ahmed, you've got such an interesting coverage list.
Once again, dude, it's all the sell side saying the same thing, which is buy the hardware names, sell the Mag 7. This is why I think this conversation has been happening all week as the sell-off continues to intensify, folks, about what sector of the market deserves a premium versus what sector doesn't. And Google, even after 82% cloud growth, if that deserves to go down. Remember, this guy's on the sell side from Evercore. We had the Melis research guy yesterday. These are the people telling their institutional investors, hey, sell Microsoft, sell Meta, go buy Micron, go buy CoreWeave. And it's like, I wonder if you can have both. I wonder if Microsoft, which is paying CoreWeave, and Micron can go up if Micron and CoreWeave are going up. And if we can't, like, where does this market go? As Nebius goes below 195, that is getting hit. And Tesla goes below 310. Jensen has officially hit 100,000 followers on Dex. 103,000. I don't know what to comment under his post. I want to have a good comment. You guys got to help me figure out what to comment. Robinhood. Oh my gosh, dude. 8% down. Just an ugly Friday. If we actually reverse out of this, even if we recover even 50% of this, which would still leave us pretty red for the day, it'd be incredible. But SMCI, after that monster move, down 6%. Credo down 11. Peng down 8. Enphase down 6. HIMS down 10. SpaceX down 6. SpaceX, basically the 52-week lows. Obviously a pretty ugly day. All right, folks, let's get someone onto the show that I said would be on earlier today, and let's get their perspective on, well, really what's going on in AI. This is Jeff Lawson, co-founder and former CEO of Twilio. He is now the CEO and co-founder of Inertia, nuclear fusion startup focused on commercializing laser-driven fusion power. I think it'll be very interesting to talk to him and get his perspective on what's going on in the energy space and where he thinks the tailwinds are for AI. Ladies and gentlemen, Mr. Jeff Lawson.
Howdy, man. Thank you for having me.
Thank you for being on the show, man. I appreciate it. I've been a fan of Twilio for a long time, so happy to talk to you and get some updates on the new stuff that you're doing.
Thank you.
So I think let's get started right now. This is a market show, and obviously there's a little bit of a market meltdown we're having right now as we're seeing a lot of stocks take a big hit. You are the CEO of Inertia, which is a nuclear fission company. I guess we'll get started with, what are your raw thoughts on where the demand for energy is going when it comes to AI, and why you're building in the nuclear space to try to resolve some of this stuff?
Well, it's interesting. Building a fusion energy company is not a short-term endeavor. So the goal is not to power an AI data center that's getting built today, because fusion energy is a long horizon technology. But I think we all say, hey, if fusion energy was on the grid today, it would completely change the way our society operates. Why? Because fusion energy, it is cheap, it is clean, it is safe, and the inputs to it are abundant. And so it's amazing actually, if you think about the inputs to it, we're used to burning coal or other things like that, that's how we get our energy. The inputs to fusion are so abundant that if you powered your whole lifetime's energy needs, the only thing it would consume is about a bathtub full of water and a single laptop battery worth of lithium. So you think about the promise of this technology is just, amazing. It has been the holy grail of energy for 75 years since the nucleus of an atom was first really understood. The only question has been, is it possible to actually make this thing work? And that's why scientists have spent tens of billions of dollars, hundreds of attempts, and machines have been built to try to unlock the power of the atom in this clean, safe, cheap, and abundant way. And it wasn't until a few years ago that Lawrence Livermore National Lab finally cracked the nut. And so that's really why I'm focused on it. It's less to do with the today demand of energy, because I believe that, this is a long bet. And the long bet here is that humanity's energy needs will always be expanding.
Do you think AI kind of created a tailwind for starting this company at this moment, even if there is a long-term focus for energy?
It certainly does, right? It certainly does. I think that it's bringing into the forefront energy needs and the importance that it has for, not just our day-to-day use, but, what's interesting is, the more you look into how humanity uses energy, yes, there's, AI, which is certainly in the news today about all the data center capacity that we're building and therefore all the energy that we need for it. But, it's amazing. There's other news stories as well. A lot of people don't think about it. A third of humanity's energy is not even electricity at all. It is process heat, the heat we use to make things like steel, cement, fertilizer. And so when you read these stories about, the Strait of Hormuz, there's no fertilizer leaving the Gulf. And so how are we going to grow all the shit? Literally, I guess. It's amazing. Actually, fertilizer is made because we burn coal to make it. That's how you make fertilizer. And in fact, that's why our fish have so much mercury in them, because we're putting all this coal into the air. It's like the societal impacts of having low cost energy go way beyond the short term, because you could instantly green the steel industry, instantly green, fertilizer, cement, like all these very pollutive, very dirty industries that we think about today could be fundamentally transformed by the promise of fusion energy, because it's actually very hard to create a high quality, high temperature heat source that you can use to green all these industries. And so anyway, I just think about all of these different things about how society would be different if we had fusion energy on the grid today.
By the way, everyone likes your mic. As I need to I need to hit you up after this to get the quality of your mic. It is sounding pretty crisp. How far? Yeah, there you go. Oh, that's a road. Okay, I have an SMB. I probably need to invest in a road. How far away do you think mass nuclear energy at scale is?
For the inquiring mind, it's the EV RE320, a pandemic purchase.
There you go. Perfect. How long do you think it is away? Is it 10 years away, 5 years away, 20 years before this becomes a real reality?
First energy on the grid in about a decade. Right. So just being totally realistic, that is what it's going to take. And that is after the science has been proven for our particular kind of fusion. Now, there's many different approaches to fusion out there. And a lot of people have made the argument, about, we should pursue this one versus that one versus that one. And look, I readily admit that I am not smart enough to guess which approach to fusion is ultimately the one that would work of all the ones that have never been scientifically proven. The only thing I'm smart enough to say is that one approach has actually already worked. And so that's the one we're commercializing. And that's the one that I would say from the point where it has already been demonstrated in the lab, now we're taking it out of the lab and putting it onto the grid. And I think that's about a 10-year horizon.
You were the former CEO of Twilio, which was a software back-end architecture for sending people messages. Now you're doing fusion energy. What has the difference been like from going in a software company now to dealing with hard atoms?
I'll preface my answer by saying when I started Twilio back in 2008, I did not know the first thing about telecom. In fact, that was why we started the company, because we believed that software developers needed access to telecom in order to build all sorts of applications that they were building. They needed to use phone calls and text messages and all this technology to talk to their customers, engage with their customers. Yet, as a software developer myself, I had no idea how to do that. Like making a phone ring seemed magical. And so we started Twilio actually to solve this problem because we wanted the solution ourselves and we literally had no idea how to solve it. So we're like, all right, let's finally figure this out and go do it. And so one of the things that I've always loved is diving into a new domain with a beginner's mind and asking fundamentally new and different questions to come to a different outcome. And that's how we created Twilio, which is, everyone in the telco world was very focused on a certain way of providing value to the world, and they completely missed this other approach, which was essentially building an API, selling it as a pay-as-you-go web service, and empowering the whole software generation to now suddenly be participants in the telecommunications market. So I look at Fusion in a similar way. Obviously, it's a big change in a company. Certain things are similar, certain things are different. But for me personally, it's the same idea, which is enter the space with a beginner's mind, see things a little bit differently, and then have a new hypothesis that somehow people may have missed in the past. And actually, it's interesting. Can I share my screen? I'll show you what I'm talking about.
Please do.
I don't even know. Can I hijack your screen to show my screen? I don't even know.
You got it. That's why you're here.
We published this actually just this week. It's a commercialization roadmap, basically. It's on our website. And I want to show you this. This is a chart of every fusion approach that has ever been built and their results, basically. And the vertical axis here is how well they've done to reach the conditions needed to actually create net energy. Because people have been building fusion machines for 75 years. And yeah, we figured out how to like compress a thing and get a little drip of energy out, but nowhere near the amount you need to break even. And so the little like U-shaped curve, that's the zone where you're starting to get energy out. That's the goal line, basically. So the red dots are all the various approaches, and the purple ones are the approach that we're pursuing. And so you kind of wonder, when you look at this chart with fresh eyes, you're like, wait a minute. Why would anyone pursue one of these red dots when clearly this purple approach is just up and to the right? And so it like that jumped out of the page to me as a beginner and a fresh mind in this space when I started looking at it a couple of years ago. And so I started asking the questions of like, well, how come people are pursuing these red dot approaches and not just the purple approach, which clearly is kind of miles ahead? And it brought us to this hypothesis, which is to say, if we want to see fusion energy in our lifetime, what's the most probable way it's going to happen? And so on the y-axis here, we said a simple yes/no question. We created this 2x2 matrix. Simple question: has energy gain been demonstrated? Has this thing ever created energy? Yes or no? And then on the x-axis, we just said, okay, how economical is it thought to be? I mean, of course, knowing that it's all hypothetical today because fusion has never been on the grid before, right? And so you plot all these different approaches, and all these ones are, those red dot approaches. There's various things called tokamaks and stellarators and z-pinches and all this kind of stuff. And then the approach we're pursuing is called laser indirect drive. And it's the only one that's sitting in this, yes, it has actually been demonstrated in the lab. And so the fundamental question we asked ourselves, which for some reason no one else was asking in the space of fusion, was what is a more likely thing that's going to happen? Tens of billions of dollars have gone into these approaches. And after 75 years, they still have not worked. So what's more likely? That some startup today is going to be the one to take one of these approaches and move it up into the working category, or that we can go take the working approach and move it to the right and make it economical. Take it out of the lab where it's a giant science experiment in a lab, which is not economical at all because it was never intended to be, and actually make it economical. And so this is our hypothesis for fusion energy, which I say because I think it's super interesting in the sense that no one had asked this question before in the space of fusion. Tens of billions of dollars have been spent, hundreds of machines have been built through the years, yet once one of them actually finally worked, no one said, how do we make it economical? And that's what we're here to do. And so I find that beginner's mind is so important. The other thing I'll point out, which is different, obviously the timescales to create value are different. When you're doing atoms, think about SpaceX, right? SpaceX was the 25-year overnight success, right? And the thing about software versus one of these deep tech fields is that actually the exercise in many ways is fundamentally the same, even though the way you go about doing it and the time frames are longer and in many ways more expensive. And the reason is this: any kind of startup, any kind of new endeavor, period, what essentially you're doing is you're trying to figure out, how do I create value in a world of high ambiguity? That's what any startup is, whether you're doing software, whether you're doing hardware. In software, however, the interesting question was always fundamentally different. In software, the question was always, hey, we know that if we have an idea in software, we can probably go build it. Because software is, you can build anything in software. And so the hypothesis, the question you're always asking is, does anyone want it? If I built software that did this, if I built a SaaS product that did that, would anyone pay me for it? That's the question. And so you're always running these experiments, and you're using Agile and sprint over sprint. You're building little features and putting them in front of customers and saying, we're in the right direction, yes, no, right? That's what you're doing when you're building a software company. And in fusion energy, it is the exact opposite, which is we know that if we can build low cost, abundant, safe, cheap energy, that's the world's largest market, trillions and trillions of dollars spent on energy, we know the world will buy it. The question, though, is it possible? And so the exact opposite question.
Given this take you've just had on software, and given you built a pretty big software company before, do you think software is dead in the age of AI? Does it all get vibe coded away?
Yes and no. And I'll give you, and by the way, I've been saying this since 2023, I think it was, kind of right after the ChatGPT moment. To me, it became apparent that SaaS was fundamentally screwed. And here's why.
Wow.
But it's not the reason that a lot of people give. A lot of people are like, oh, we're all just going to go vibe code our own solutions. Now, there is some truth to that. But people think about it like, oh, well, I don't want to pay $10 a seat for Salesforce. I'm just going to vibe code my own version of Salesforce with all the features and capabilities and support. No, you're not going to go do that. You're still much better off just buying a thing that does the purpose. But the thing about SaaS is most people are probably using about 2, 3, maybe 5% of the capabilities of that software. And so why am I paying for 100% of the features when I only need 5%? So if I can just go vibe code the small sliver of value that I'm actually getting out of this, that is where SaaS can be potentially taken out because I only need a small fraction of what I'm actually paying for. So that's the first thing. But the second factor I think is even more important. And it's this. The business model of SaaS is what's really screwed here. Per seat pricing is gonna be the downfall of these companies. And the reason why is if AI is coming along, and we all know it's affecting jobs. And so if companies stop growing their employee bases or shrinking their employee bases, well, what happens to your per seat pricing model? Obviously, you're going to be paid less because you need less seats. But here's the innovator's dilemma. So the answer to that, of course, is some sort of usage-based, token-based pricing that a lot of AI is clearly going to follow. So if I'm a company like, say, a Salesforce, you're like, how do I manage that transition? Because I can't go in and say, guess what? I'm going to replace all my per seat pricing with now a completely different business model. You disrupt yourself way too quickly. And so you're going to drag your feet. You're going to say, hey, guess what? Announcing all the suite of AI features. It's amazing. And I'm going to make all your salespeople 10% more efficient. And I'm going to charge you even more for these features, right? And smart buyers are going to look at this and say, well, wait a minute. I don't need to make my salespeople 10% more efficient with a bunch of features. I need to actually replace a quarter of my salespeople and make them fundamentally more efficient. And Salesforce won't want to sell me that software. They won't want to sell me the AI that's going to let me take out a quarter of my seats. And so some startup will. Whether it's a foundation model, whether it's a vertical software play, whether it's something like that, that startup has no innovator's dilemma. That startup is going to go in and say, I'm going to sell you the solution that lets you reduce your sales headcount by 25%, and I have no innovator's dilemma. I have only upside to sell you that solution. And so that innovator's dilemma, the per seat pricing versus the token usage-based, that's the thing that I think actually screws software.
Very interesting insights, especially from someone.
You see this already playing out, by the way, interestingly. When software has been in the public market, when software has been in free fall this year, companies like Twilio have actually gone up. The last few weeks, I think, has been bad for Twilio, last week or so. But in general, Twilio, which is a usage-based pricing model, has bucked the trend of software. Why? Because it's powering a different category of company, and its usage model is not exposed to a per seat pricing model that gets disrupted in this transition. And I think after the Q1 or Q2 earnings in particular, people started to see the power of that business model, which is decoupled from seats. And so therefore you start to see this differentiation between SaaS per seat companies and usage-based infrastructure companies that, various times through the history of Twilio, people would say, oh my God, how come your infrastructure, the margins are lower, why don't you go do software and all that? And we always push back on that. Well, infrastructure is, we're kind of the picks and shovels. We're dealing to everybody, and, we're letting everybody build on top of us. And people say, but the software guys are getting all the margin. And so there was always the tension there. And now I would say that, Twilio shareholders are pretty happy that it's not a software business model because, again, picks and shovels, Twilio is selling to all these new AI disruptors as well.
It makes a lot of sense. Jeff, thank you for joining the show. Last question for you. The small module reactor business in nuclear, what is your opinion on that? And do you kind of think you have a different approach to thinking where nuclear is going over the next 10 years?
Yeah, it's a fundamentally different approach because SMRs are fission machines, so the same technology that today's nuclear power plants are, which is essentially splitting heavy atoms like uranium into lighter atoms and doing so releasing a bunch of energy. SMRs are a clever approach because they're saying, hey, look, today building a large, light water reactor is very expensive, is very difficult. In fact, we have had very poor track record of building these things in our country and even in the world in general. And so an SMR is a fundamentally different one. It's smaller, it's made in a factory, it is sealed, it is shipped to a site. Like that's the promise of these SMRs. The problem with SMRs is, I think, twofold. One, regulatory. So the challenge of building a a fission reactor, the technology has been well understood. In fact, the design that is used today is 60 years old, and so that it's well understood. But the regulatory framework is very unpredictable. It's so difficult to jump through the hoops of regulatory. And by the way, this is not a complaint about regulation. I think we all want people to have to jump through a lot of hoops to build a nuclear reactor in our backyard. But that means for a developer, there's so much uncertainty. And that's why these projects regularly overspend their budget by 500%. They start off saying this is going to be an $8 billion project. And by the end of it, it's closer to 40 billion, right? And that's regularly something that happens in the world of fission plants. And so that's what makes them so hard to finance and build is the uncertainty. But the regulatory environment for fusion is completely different. Right. Because the safety factor is completely different. The environmental impact is completely different. It is a fundamentally clean and safe technology. You're basically taking lithium and water and turning them into helium and giving off a ton of energy. In fact, the regulatory framework for fusion basically is like a hospital. Hospitals, deal with nuclear material and their imaging, parts of the hospital. And so, they're regulated to make sure that's, safe and well handled. That's how fusion is. So it's as difficult as building a hospital. Could be in your backyard. Like people have hospitals in their neighborhood and they're pretty happy about that. Same thing with fusion. And I think that uncertainty is actually the thing that is unresolved with any kind of fission reactor, let alone an SMR where the promise is it's small, it can be closer, it can be in your neighborhood. You're like, yeah, I'm not sure society is ready to adopt that model because of the track record of fission. And by the way, I'm a fan of fission. I actually think the world would be much better off if fission was more widely deployed. I just think that I don't know that society is ready for that. That's why my bet is on the development of fusion, which is fundamentally clean, safe, cheap, and abundant, is the future that we're betting on.
I love it. Definitely got a lot of people that are excited about it. Parzival says, thanks for working hard towards a future powered by fusion. It's definitely something that's difficult. It's definitely something that's harder to do, obviously, because it's not, as light asset-wise as software, but I think it would also be very rewarding as well. Jeff, last question for you before you go. Thank you again for giving some insight on what's going on in the nuclear energy space. I ask every guest this question, but what is your favorite movie?
Ooh, The Fifth Element.
Classic. Absolute classic.
And I have to invite you out. If you're ever in Livermore, California, I want you to come out to our HQ, see Inertia. And by the way, we've got the one of the Mondo Shiwan from The Fifth Element. We've got one of those screen costumes in our lobby.
I love it. No, I got to come just to see the costume now. Just for that. All right. Thank you, Jeff Lawson. Appreciate it. Hopefully we have you on the show in the future. And I'll let you know if I'm ever out there. Later.
Bye.
Okay, got some information around the nuclear energy space and what's going on. While Jeff was talking, markets got a little bit of a bump, the slightest bump, but a little bit, right? We got a bit something. By the way, guys, the echo was on his side. So I had to mute him a couple times when I was talking to get rid of the echo, but yeah, the echo was coming from his mic was great, though. I mean, that was crispy freaking mic. Tesla right there, 310. As that continues to go red. Google actually still green, but not as green as it was. It was at 323, now at 320. Nebula still down 10%. NVIDIA, I don't know what he said that got NVIDIA to pump, but NVIDIA 210, now 209, but at least still somewhat green. Everything else, though, is still pretty ugly. I mean, still relatively ugly across most of these semis that are taking the hit. Dude, I know what the Fifth Element is, okay? Chris Tucker, Bruce Willis, 1997 classic, okay? 7.6 out of 10 on IMDb's. Don't freaking doubt my movie connoisseurness when it comes to the Fifth Element, okay?
The Fifth Element. It's a fucking classic. How do you guys not know what the Fifth Element is? Nebius, 197. Nokia really getting hit there. Meta and Microsoft finally flipping green as well, but that's all because the semis are continue to going down. I mean, Cornelius, the monk? Like, what are you talking about? Of course I've seen that freaking movie. The Secret Agent, Lilo, like, don't Luke Perry, Mila Djokovic. I mean, it was an absolute classic. Like, I can't wait to see the costume that he was talking about. 5.15 on T1 Energy. That stock down 9%. What an ugly, ugly reaction towards, I guess, oil, because it can't be because of Intel earnings, as those were relatively good. Google is signing the EU AI Act Code of Practice on Transparency of AI-generated content. Okay, so Google is signing whatever legislation they can sign to get the EU off their back. Marvell right there. That's down 7% as well. I did not ChatGPT it, bro. I know the Fifth Element. Just because you guys don't watch movies don't mean you have to take it out on me. I can promise I did not ChatGPT it. Now, Google AI overviews, that's a different question, but I can promise I didn't ChatGPT it. I can promise that. Let's get a little bit more coverage here on Intel. See if we've got anything being said about that.
Everything. Just that they were making progress. So the way that Lip-Bu explained it to me is that, you know, their processes and production for their own products is improving. But they're still in a place where demand for CPU in particular is outpacing what is improving supply, right? Antoine, you'll remember last quarter, they basically left money on the table because they couldn't meet the demand. Do you recognize that kind of operational progress?
Yes, I mean, we heard a lot of very encouraging data points on capacity increases on the call. First of all, you have yields, of course, that are improving. That directly increases, the output of the good chips that you can produce. On top of that, Intel has a lot of shells that they've been building over the last few years that they can now fill up with equipment. All of that puts Intel in a good position, to, well, number one, as you said, address the huge demand that there is for CPUs in this agentic era, and two, potentially start addressing, demand from external customers as well. They targeted 15 billion external foundry revenues in 2030.
Yes.
And I think there's increasing evidence that it is actually pretty tangible.
I still, once again, think the stock is down because the market's still doubting that foundry is going to flip positive anytime soon, even though by 2030 they are pretty optimistic about it. That and obviously some of the macro stuff today. But I mean, that 14% pop after earnings I felt was pretty justified given the results. It's just, can they hold on to it? Robinhood really is giving us a 7% day. Tesla bottomed at 308.50 today, now at 309. Just an unbelievable decline. It's lost, what, 400 billion of market cap past month? I mean, this was pushing 380 a month ago, as it's now 309. That's how you say it. It's Djokovic. I don't know why you guys are... That's how you freaking say it. Mila Djokovic. Jovovich. I mean, I don't know how else you would say it. Gary Oldman, Luke Perry again. The cast is the cast you could never forget, given how strong they were. 309 Tessie. 309. Yeah, Leopold is heavy in Intel as well, but he also hedged. It's just funny because as soon as the market opened, it was just down. It's like everyone was just waiting for 9:30, and then it was an onslaught of, yep, we're taking it all out. Oracle, nothing is helping Oracle here. Not even that $7 billion they got. Oracle 117.80. They just need to send SpaceX below 100 at this point, dude. Why are we even playing with these extra $12? Like, just take it below 100. There's probably gonna be more buyers, at least somewhat interested below 100. By the way, what if SpaceX is the only IPO that goes through this year, and Anthropic and OpenAI end up not making it out? Because, dude, does anyone believe those companies could IPO in this environment? There's no way in hell. I mean, Elon, say whatever you want about him. He timed that IPO so perfectly at the exact moment that euphoria was literally peaking in the market, that people were ready to pay $3 trillion for this company. He IPO'd it. I mean, Anthropic and OpenAI, they can't IPO in this environment. There's no freaking way. They would get decimated. I mean, there would be demand, but I don't know if that demand would be at all sustainable, because the SpaceX demand was there for like a week and then it, faded away. But at least he raised the money. So, whoever bought those shares, but the company still got the benefit of raising the capital. Whereas Anthropic and OpenAI, it's a different question. SPY, though, is getting a little bit of a move, 740. So it wouldn't surprise me if we start to see some other companies kind of participate. Yeah, you have Jersey Mike's next week. I mean, maybe they can successfully IPO, but Anthropic and OpenAI are just much bigger. Trump tweeted a picture of him and Otani, but you don't have any actual tweets about the market. Oh, do we have it? Hold on. Pakistan and Iran explore a path towards new talks with the U.S. in a China-initiated push. I think that's good, right? Wow, look at SPY. That's got to be good, right? There's no way that's bad. Right? China wants to mediate a resolution. That's bullish, right? That can't be bearish. Pakistan and Iran explore a path towards new talks with the U.S. in a China-initiated push. Dude, if that's how this Friday can end out on those pieces of news, that'd be way better than going into the weekend without that. Cactus, is this Axios? Or is that Reuters? I mean, someone did just buy $2 million worth of puts on XLE. I mean, dude, if we start seeing the short float or the put volumes come in on oil, everything oil, VG, Chevron, Exxon, etc. Where's oil right now? That would potentially be confirming that rumor. Oil's at 89, down 3%. It's from Reuters. Why would China want the conflict to end? Because they get a lot of oil from Iran, and they probably want to stabilize prices for them as well. So obviously a lot of cargo and shipments and goods that they need to get through as well. I mean, also, you never know. Maybe Iran went to China and said, dude, we know there's no way we could take on the United States in a real military battle. So, like, you guys got to get us some favorable terms and fix this shit. Interesting, though. Is it actually something that we can meaningfully expect? Iran is actively reviewing mediation proposal from Pakistan while maintaining continuous detailed consultations with allies in China and Russia. I mean, that's better than not, right? If Trump could come out and confirm that, which he probably won't, but if he does, that would help too. Nebius back to 200. I mean, look, that should be enough. Robinhood trying to get a little bit of a bounce to 95. But then again, Israel's coming on Tuesday to the White House. I mean, if Trump is set on this large attack, yeah, maybe that's also why these rumors are coming out, because Iran's probably taking him seriously, and they're like, all right, we don't really want him to blow up our civilian energy infrastructure. And I don't think China wants to see that happen either. So maybe China's coming in and trying to protect something. Look at the SPY, dude. That's a pretty nice candle. 737 to 742. Robinhood 95. Okay, now we're seeing some action. Robinhood, if we can get above 95.50, that would be really nice. Nvidia going green. Trump, did he tweet? Did he tweet? Tell me he tweeted. Tell me he tweeted. He tweeted. All right, here we go. President Xi at our recent meeting in Beijing told me that he would not under any circumstances give or sell weapons to Iran, and that statement included Chinese companies. Considering our relationship, I take him at his word, and besides, I am doing him very big favors also. Likewise, Putin, despite the horrible war going on in Ukraine, told me that he would not sell weapons to Iran. He understands that I do not sell weapons to Ukraine, but to NATO countries. They pay full price, and how those weapons are distributed, I have no idea. Therefore, two major countries that people speak of in terms of Iran are, in my opinion, not participating. If they did, it would be very bad for them, certainly not in their best interests. Okay, hold on. That's not the nicest tweet. Right? That's a good... is this even like a... Isn't he just warning China and Russia in this tweet? I mean, it's good that he's saying that China and Russia told him they're not going to sell nukes. This is not the taco, folks. This is not a taco. This is absolutely, there's zero taco in here about not escalating. If anything, it feels like it's like threatening Russia and China of like, hey, you guys better not do shit or else you're going to get involved, which would be absolutely devastating if China and Russia are now involved in this. So why is the market reacting so positively? Maybe like we're seeing Robinhood's losing it. I don't know, guys. I don't know if that's enough. I don't know if that's anything, to be honest. Does anyone think that was a taco at all? Like the first, they had me in the first half. I was like, oh, he got confirmation that China and Russia want to, like, because we just got a headline that China's trying to mediate a deal. And then Trump starts in the first 5 sentences talking about China told us he wouldn't sell weapons. So in my head, the next 3 sentences were going to be, as a result, I have decided to blah, 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 blah. And instead it's like, hey, if your bitch asses start doing anything with Iran, you guys are next. That's basically what he said, which was not the taco. The first 3 sentences made me convinced, especially after that Axios report, we were probably going to get something. And then the stock started going up. So I'm like, okay, cool. That is not what happened. Complete plot twist. Mate, you got us excited for nothing. Dude, you guys got excited for nothing. You guys started getting excited before I even pulled up the tweet. Everyone got excited. Because we're so desperate for anything. S&P, some red candles from 743. No, that's nothing, dude. That's legit nothing. If anything, that's worse. He's threatening China and Russia now? Like, if I'm Putin or Xi, do I like reading this tweet? If they get involved, quote, it would be very bad for them. Certainly not in their best interest. He sounds like a mob boss. Certainly not in their best interest. Like, no, that's not de-escalation. That's not anywhere close to de-escalation. Yeah, this is bullshit, bro. This is just complete bullshit. That was like a 5-second. I think even the algos on Bloomberg were like, okay, Trump tweeted China, Russia, cooperation. And then you get through the rest of the tweet and it's like, hold on, it's a threat? That's a burrito, not a taco. Oh my gosh, dude. All right. We almost had a chance, guys. We almost. Brady, thanks for the super chat. No taco this time. We're going to escalate, 90% sure. I mean, bro, that tweet, how does that not sound like an escalating tweet? I mean, oil is actually, it's not at 90. So oil, before I read the tweet, this was 7 minutes ago, was down 3.2. Oil is now only down 2.4, which means it just gained 70 bips. It took a few minutes, I think, for all the algos, the commodities, the markets to interpret the tweet, because there's always a knee-jerk reaction as soon as the tweet comes out. And the interpretation of the tweet is that it is not de-escalating. Having said that, it still is kind of positive that which maybe is the reason stocks could still get a bit of a move here, that Trump is confirming that Putin. Also, does Trump actually believe that Putin and Xi don't want to sell weapons to Iran? Like, why would he believe that? Right? Why would he believe that? He's like, President Xi at a recent meeting told me he would not under any circumstances sell or give weapons to the Islamic Republic of Iran. There's no way in hell the U.S. actually believes that's the, like, of course he's going to say we're not going to sell weapons to Iran. I don't know if that's something you're like, well, he told me he wouldn't do it. I don't know. I don't know if that's the thing the market's like, but maybe there's some way to interpret this as being more bullish or not. Robinhood's trying for 95. It got to 95.30 before it came right back down after I think the tweet was fully analyzed. SoFi flipped a little green, and then Tesla is still down as well. Yeah, like, why would we believe Putin, dude? After everything that's happened over 4 years, likewise, President Putin told me he would not sell weapons to Iran. It's like, okay, what? He was going to tell you that, yeah, we're getting a deal with them next week? Like, I mean, this post just feels kind of useless, to be honest, unless he's trying to signal something else in this post. Maybe Trump's trying to make the argument that, based on that Reuters report that just came out, that China's trying to mediate a path. This is Trump's way of, like, if you read between the lines. Okay, so maybe the bullish interpretation of this is Reuters report comes out 5 minutes before the Trump tweet and says, hey, China's trying to mediate discussions. In the report, Iran is open to Chinese mediation, along with the Pakistanis. Maybe Trump tweeting something effectively positive about China, even though there's a big threat at the end of this tweet, is hey, again, this is like the read between the lines type of interpretation. Hey, we are willing to engage in Chinese mediation to come to some level of a resolution with Iran. That would be the most bullish thing I could stretch out of this tweet if I were to try to do it. I might be coping, though, but that's how I would interpret this tweet if stocks end up actually flipping somewhat green here. Palantir 124, that's going green. But I could obviously be wrong here. All right, that's what we got. Right at around 11:30, you got Mr. Trump making this argument about Iran. By the way, Jensen now has 178,000 followers. I still need to figure out what do I tweet under his tweet. Damn, markets really got to move on that though. Like Nvidia pushed above 210. Robinhood's still trying to push 95. Google got 320. HIMS is still hit. Broadcom went from 381 to 385. Like that was, I mean, that tweet moved billions of dollars. You know what happened? You know what happened? I figured out what happened. I think I figured out what happened. The reason we got the pump and then the immediate dump, the reason we got that pump on the Trump tweet and then the immediate dump, I think I figured it out. I think the hedge funds that paid $100,000 a month to the Trump Truth Social API got that damn tweet 30 seconds before we did, and they bought up everything, which made us think, what happened? Did he tweet something? We go to check the tweet 30 seconds later, and then they sold that shit once by the time we ended up reading it, which took us about a minute, to realize he's actually threatening China and Russia. He's not tacoing at all. I think you guys should now call me Amit Holmes, because I'm acting like Sherlock out here, because I legit think I just figured out what the hell just happened. I think I legitimately figured out what the hell just happened. You tell me Robinhood goes from 95.30 back down to 94.30 in a minute after the pump, and no one made any money in that moment? I figured it out. Bingo. Can I get some W's in the chat? Like, tell me that theory is not legit. Tell me that is not legit. They started selling the API, 100 grand a month. And that's why, they're underselling the API. 100 grand for a market moving tweet to a hedge fund that could have made $1 million in that moment. S&P going from 738 to 742. That's a hell of a move, especially if you're playing with tens of millions of dollars. 100 grand for that? It's nothing. Absolutely nothing. Thank you. Feels like you guys agree with me. There we go. I'm just kidding, but the fact that I'm even coming up with this theory is hilarious, because the fact that the president of the United States is selling $100,000 per month access to his market moving tweets, the fact that that's a thing and that we could come up with that theory because of it is crazy, dude. That is not my nickname in Grindr, bro. Why do you guys always have to bring it back to Grindr? Is Amit Holmes your nickname in Grindr? It's not my nickname in Grindr, but I do think that theory is legit. Oracle right there, also getting a little bit of a move. Wouldn't that be insider trading? Yeah. This whole year, everyone connected with Trump has, guess what? Insider traded. Every single freaking person knew something long or short before it actually happened. Everything. I mean, it's laughable here. It's genuinely laughable, dude. Could we imagine if any other president sold access to market-moving tweets for $100,000 a month? Like, unfucking believable how corrupt that is. It is what it is. There's nothing political about it. Democrat or Republican doing that is unbelievable. But it's the world we're living in, and no one's going to get in trouble because, Paul Atkins isn't doing anything about it. And all we can do then is wait to see how this ultimately plays out. Marvell right there, still down about 6%. Yeah, we need to pool together 100K so I get access to the API. And then all of us... Because again, remember, the pitch on the API was you will get access to Truth Social posts faster than anyone else. If you actually read the article that they put out around, why hedge funds should pay for this, I mean, it said it was tweeted at 11:15. If that thing even got to the people paying for the API at 11:14 and 30 seconds, I mean, they are programmed to buy and sell immediately. And that 30 seconds is a lifetime in the stock market. Rocket Lab still down 5.3% here. It's absolutely crazy. All right, I guess that's what we're dealing with today. So the core thing in the past 20 minutes has been this update on mediation from China. Trump kind of confirming that mediation. And the market reacting to it somewhat positively. Some stocks holding on to that move from the Trump tweet. Other stocks giving away a lot of that move. Nebius from 201 to 199. Oil is dropping, though, so the market somewhat feels that, yeah, oil is now 4% down. So there's got to be some interpretation that the market's taking from that tweet, even if it's like reading between the lines implicitly that Trump is willing to negotiate. Because again, the one, he comes out on Monday, says, we are in good negotiations, we rip, and oil goes down, which could explain some of the put option volume on XLE. And maybe there's a front run of that potentially happening. Potentially. They'll probably just be putting in a lag between post and publish. Yeah. Yeah, 100%. It's actually pretty simple, dude. Trump presses tweet. Tweet goes to one part of the API and then gets published publicly to the actual platform. And then boom, there's your alpha. Because they're selling it as like you get a sentiment shift of what's happening in the stock market based on Truth Social posts. It's like, does anyone scroll through Truth Social to see what people are saying about NVIDIA? Like, it's unbelievably corrupt. No one on Truth Social is talking about Micron. They're all talking about MAGA this, MAGA that. It's all politics. It's a cesspool of just political commentary. The only thing that moves the market from Truth Social is Trump's tweet. So that's what the hedge funds are paying for, which is just crazy. They're just paying for access to him. And he's the president of the freaking United States of America. It's unbelievable, dude, but this is what's happening. Oracle right there is down 1%. SpaceX down 4.5. Surely the SEC will do something about it. I don't think so, dude. I wouldn't think so. Who knows? Marvell still down 5. ServiceNow up a little bit today. Walmart still down. ASML down 1.18. Where's Micron? Are we still above 930? 935. Okay, so this bottomed at 920. LeBron to Philly? No way. Mamba, don't tell me you're messing around. Don't tell me he's going to Philly. Don't tell me it's actually Philly. Oh my goodness. He's going to Philly. Oh my goodness. What? I just lost $400 in the prediction markets. I had Miami. Why is he picking Philly? What? Forget the money that I lost. I don't even care that much about that. I just can't believe he actually had Philly as a legitimate part of his list, dude. Guys, I know this is a market stream, but this is what? No, it's 8 million because he has to take the vet minimum because they can't pay more than that. So the 8 million thing makes sense, but Philly out of all places? Philly? I thought it was Miami or Cleveland. Philly? I bought Miami in the prediction markets because I legit thought it was Miami. Like I felt like it was going to be Miami. I felt like Pat Riley back to the team he won a championship with. Giannis. I thought Miami had a chance. I was dead wrong. I was dead wrong. Now, I don't want to get into sports analysis here because we're here for the markets, but the one thing I'll say is I think he's picking Philly because they haven't won a championship in so long. And so he thinks that if he can bring a championship to the city, that'll help his legacy. But I just really don't like this move at all. Oh my goodness. I lost $400. It's $400. It's not that crazy, but I thought it was going to be Miami. Do we have any Sixers fans in the audience? You guys should be going crazy, right? Oh my goodness, LeBron, Philly. Ew, dude, it's like I did not expect that. Robinhood trying to break through 95.50. Nvidia basically flat. Again, oil continuing to come down. Mamba, you think that's crazy, right? Like, did anyone really think it was Philly? Like, I knew they were in the headlines, but I didn't actually think it was going to happen. Goodness, man. Myth, they're talking about escalation in the Middle East. We should expect things to deteriorate after the stock market closed today. Well, I think that's part of the reason we front ran the selling, because if we escalate over the weekend, then Monday is going to be ugly as well, right? But now this whole China mediation thing coming out of nowhere makes me kind of think maybe it'll be okay. Like maybe there's a chance that it's not as bad, which is why oil's tanking right here and stocks are at least somewhat getting a little bit of a move. Dude, Philly, bro. Goodness. Philadelphia. Nebius back above 200. Philly's just weird. He's going to end his career in Philly? What? What is, like... That's so weird, man. Yeah, the 10 years also down as well. So it begs the question, why is the market not reacting more positively towards that? All right, folks, I think that's it for today. Crazy day, man. Crazy freaking day. No, I know that MJ went to the Wizards, but MJ also finished his legacy. The Wizards was just like something he messed around with. I think Bron is trying to have Philly be a part of his legacy. Okay, there's too much to analyze when it comes to this. There's going to be so much to talk about, but when it comes to the market, this Trump-China thing just completely flipped up the narrative on the red. I mean, the S&P was headed towards 737 until that Trump tweet and that Axios report came out, and immediately we flipped. And we're not at the exact highs, but we're holding it, which makes me think the market is feeling there is a possibility that we de-escalate next week. But we're going to have to see. Yeah, the $400, dude, $400 is whatever. I threw it on Miami because I was just like, whatever. I think it might be Miami. So I bought like 1,000 contracts at 48 cents. I was like, all right, whatever. But, I kind of bought, that's why you do prediction markets. You do it to like, you put a little money on the line. It's more fun. It's not even about the money. I just can't, but like if it was Cleveland, I would be like, okay, I understand. Like as a sports fan, Philadelphia is weird. So it is what it is. It is what it is. We'll figure it out. Yeah, I blew 2 of Triple V's donations on gambling that LeBron would go to Miami. 41.50 on Mr. Oklo Nebius right there, down 9%. You guys are shocked too, right? Like this is just CoreWeave. Dude, CoreWeave's not going up unless Nebius goes up. At least it's up from 74, but still down 75. Nasty red candle right there from 75.30. Then Nebius at least above 200. All right, guys. I think that's it. I think that's it for today. We'll be back on the market close. I think we'll have Sam join, maybe Chris as well. We'll keep analyzing what's going on right here. This just complicated a lot of what I thought would happen over the weekend. If Trump is tweeting this about China in a pseudo-threatening way, but also in a way that makes you think that he wants to work with them to resolve this Iran situation, which he's not saying, but the fact that he's praising Iran for not selling, or China for not selling weapons to Iran, makes me think there's something a bit more positive here. Along with this report that China is trying to mediate, you put those two things together and you maybe, and then oil coming down and the 10-year coming down, you maybe think over the weekend there could be something announced Sunday night before the futures open that is a bit more positive. Because if it's not, then we're going into full-on war again, and it becomes March of 2020, which I don't think Trump wants that, no matter how much his rhetoric insinuates that he's ready to fight. And so this China thing has complicated a lot of stuff, but I think the market is getting a little bit of a move just based on the idea that there will be potentially something different that could happen next week. All right. Word of the day. Let's do this. Then we'll be back on the market close. For those saying LeBron is going to Philly, yeah, we found out a couple minutes ago, and I can't believe it either. I cannot believe it. I genuinely did not think Philly was in the running, dude. That's as crazy as saying he's going to the Timberwolves. Like, I was just like, no, he's not going to go to Philly or the Timberwolves. Like, it's Cleveland or Miami. That's it. But there you go. All right, word of the day. Dude, what is this word, bro? Pisterism? The soft whispering sound of wind through trees or leaves? The only sound on the trail was the gentle pisterism of the pines overhead, a wonderful, rare word that gives name to one of nature's most peaceful sounds. Dude, we got to change the prompt. This has been weird all week. I want you to give me words that have to do with the stock market, but they shouldn't explicitly be financial terms. Let's see. Asymmetry. No, that's basic. Don't make the words basic like asymmetry. Make them actually cool. See, there you go. Cathius. The investment of an emotional or mental energy into a person, idea, object, belief. Many investors mistake analysis for conviction when they're experiencing Cathius. They've become emotionally involved in the thesis. That is a little bit better than Pistheus. Some shit about leaves or pisterism. How do you even say this shit? Okay. How do we say this word?
Scytherism.
Okay. That is not what I thought it was. Dude, it's a P and a S. It looks like pisterism.
Scytherism.
Oh, the P probably is silent. Okay. That makes sense. Anyway. Scytherism? Whatever. Jensen just passed 200,000 followers, 205,000. I will figure out something to tweet underneath his latest tweet. So if you follow me on Twitter, you'll... But no, let's just do it together. Let's do it together. All right. What do we think? What do we think, guys? Before we end the stream, what do we think? What do we tweet underneath this? Silent P like psychology. Psychology does have a silent P. That I should have recognized the P and the S. That's a good point. As Robinhood loses 95.50, because why not? As the stock goes down. All right, what do we say underneath this? Chris said, let's go. Brett said, great read. Crossroads says, glad you are here. Chad says, welcome. The legend has arrived. We need to think of something cool, guys. What do we say? It's Jensen, his first post. What do I have to tell him to pump this shit? Reuters, Foreign Minister of Iran says we will not accept a ceasefire until its demands on Strait of Hormuz are met. Well, that's why Robinhood just went down. Is the SPY down? Of course. That's why the SPY just got a red candle. Why not? Because it's a game of ping pong, back and forth. The Iranian foreign minister says this, markets go down. The Chinese come out, they say this, markets go up. Trump says this, markets go down. The Pakistanis say this, markets go up. It's all a game. It's all a game. Oh, that's perfect. Omar, that's perfect. I knew you weren't born a loser. You gotta... Thanks for making me feel like a winner. How do we, the loser, I like that one. How do we do something with loser here? How do we make it sound cooler though? I like the loser thing. Thanks for never waking up a loser. I kind of like it, but I don't love it. What's good, J Money? I love you. I love you, actually. I'm a loser. This is actually a lot of pressure. I don't know what to say. Why do you guys keep saying Bobby will return? What are you talking about? What is Bobby will return? AMD is better. Okay, I'm not tweeting that. That'd be funny though. Have you ever seen The Fifth Element? Have you ever? No, I'm not doing that. I'm not doing. I need to watch that shit tonight, dude. Now I'm kind of interested. Chris Tucker. I'm not asking, are you on Grindr, bro? Oh my goodness. I should have bought AMD. Yo, what if we just take the AMD chart and compare it to the NVIDIA chart? Like, hey, man, we need some help here. You told us this thing would go up. Okay, this is too much pressure. I don't know. I got to think. I need a better idea. Which show is Goku from is hilarious. We need something good, bro. It needs to welcome him to X, but also feels fun, you know? Is Marvell still going to 1 trillion? Dude, I don't want to troll him. I don't want to troll him. Although that would be funny. We can see all your comments are trolly comments. Let's talk on Grindr. Would you recommend buying AMD? You guys are not giving me any help here. Like, I need something good, something that, like, you know, is professional but fun. I never lose. I follow Jensen now. That's not horrible. Welcome to the retail community isn't that good. He's been part of the retail community for a long time. I was gonna say, like, you know, X. Welcome to X. It's been a big platform to follow NVIDIA news, but that sounds so corporate. That's not fun, you know. I don't know. I'll figure it out. I'll show you guys on the market close what I figure out, and we'll put it out there. All right, so we're back on the market close. Is Steve live? Steve is live. What do we spam Steve with? What do we spam Steve with? I'm leaving his link right here. Let's spam Steve with Fifth Element. Yes. No, is there a line from the Fifth Element that's really good? Give me a popular line from the Fifth Element. What's a good line? Lilo Dallas Multipass. Okay, that's what we're going to put in Steve's stream. Lilo Dallas Multipass. Okay. Classic line from a classic movie. Okay. If Steve doesn't know what this is, he doesn't watch movies. It is what it is. Lilo Dallas Multipass. Classic movie. Steve should get it. Obviously, I get it because it's a classic line from an iconic movie. That's what we spam Steve with. All right. Thank you, everybody. Appreciate it. We'll see you guys on the market close. Bye, everybody. Have a good one.